Welcome, everyone. Welcome to today's Standards Board meeting for the Sustainability Accounting Standards Board. My name is Jeffrey Hales, and I'm chair of the Standards Board. And appreciate everybody taking the time to join us today for this webinar. And we're going to be going through our board meeting today. And I wanted to just take a minute at the outset, to go ahead and introduce the board members and some of those who are going to be on the call today. So let me start by going through the Standards Board. So for the board members who are connected, go ahead and ask you to say hello, and if you can, turn on your webcam as you do that, just so people can also see who you are when they hear your voice as well, if you have the capability to do that. So we'll go in alphabetical order by first name. Dan Geltzer, are you there?
Yes, thank you, Jeff. Good morning, everyone, or good afternoon for those on the East Coast. Glad to be part of the meeting.
Great. Welcome, Dan. Elizabeth Seeger.
Yep, I'm here. Hi, Jeff.
Great, thanks, Elizabeth. And just for those who are listening in, we have a limited number of slots for video, so we'll be having board members and staff go on and off throughout the day. Kurt Kuhn, are you there?
Yes, I am indeed. Good to be here.
Great, thank you, Kurt. Lloyd Kurtz.
I'm here. Great to be here.
Thanks, Lloyd. Mark Siegel.
Hello, good morning.
Thanks, Mark. Bob Earth. Robert.
Yes, good morning, Mr. Chairman. I'm here. Hello, everyone.
Thank you, Bob. Stephanie Tang.
Morning. Hi, everyone.
Hey, Stephanie. And Verity Chegar, are you there? Verity may not be connected yet. I know she had some issues with the dial-in. So hopefully Verity will be able to join us shortly. Otherwise, we have a full contingent of the board here. In addition, two of our key staff members are the Director of Research Standards, Brian Esterly. Brian, are you there?
Hi, Jeff. Good morning. I'm here, and good morning, Standards Board members.
Great. Thanks, Brian. And then also our Director of Research for Projects, David Parham. David, are you there? Are you on mute? Or is it an audio problem? Okay. By the sign language, I understand David is present and can hear us, and I'm sure we'll work that out eventually. If anybody else has had similar experiences to me over the past few months, we're expecting a number of technical difficulties throughout the day, as is just sort of standard. So please bear with us. We're doing our best to be transparent as we do the important work that we're engaged in here at SASB. So thanks for your understanding and patience, and for your interest in the work that we do. So just a couple of matters of business. This is an open standards board meeting, so we conduct our business transparently. However, it's not intended to be a webinar in the sense of being an interactive type of discussion between us and the audience. And so really, it's just an opportunity for those who are listening in to follow the work that we do and understand how we do the thinking that we apply to the standard setting activity. So while you won't have the capacity to actually interact with us today, and we won't be able to directly address questions that you may have today, we do welcome your feedback. And so to the extent that something captures your interest, or you have a question that you would like answered, you can submit questions through the chat function, and we will be tracking those. And of course, you can always go to our website and submit questions that you have there as well. So just want to check if we possibly have had Verity join by now. Verity, are you there? So
I'm here.
Oh, great. So glad to have you. Thanks for joining us today.
Thanks.
Okay, with that, we have everybody on the Standards Board dialed in and connected. And so I'll also note that the materials for today's session are also available on our website. If you go to the SASB website and look for our Standards Board calendar, you'll find the calendar information for today, and the slides are also included there. Also, be sure to check in there afterward, as this is being recorded, and so the archive will be available there later. So with that, let me just talk briefly about what we're going to be doing today. So really think of it as like there are three major things that we're going to be going through today. The first being to talk about our standard setting agenda, the things that we are working on right now actively with standard setting, also the other types of projects that we are engaged in, and so getting an update on those from a high level, and then we will dig in on some of the projects to discuss the progress that's being made on them. And then we are also going to be looking in more specific detail about some specific staff recommendations on projects. And so here, what we're really going to be doing is, there'll be, as projects move from start to finish, there are certain significant decision points that occur. And this is really an opportunity in a public setting for the board to hear those decision points, and also for the staff to get a board view on those decision points, really as we go through making preliminary project-related decisions. So more specifically, if we look at the next slide, we're going to be talking for the first half hour or so of today about the standard setting agenda and the project pipeline overview, and David Parham is going to be leading us through that. And then after that, we're going to dive into a discussion on specifically content moderation on internet platforms, a very interesting topic with a lot of current issues and widespread implications. We'll also then be spending some time talking about our conceptual framework and our rules of procedure, our governance documents, and we've been engaged in a project to update those. And then for the final hour and a half of today's session, we will be talking about three specific standard setting projects and looking to get, again, a board view on some of the preliminary decisions that have been made there. One of those will be a proposal for a new standard setting project, and the other two will be significant decision points around the projects that we're already working on in tailings management and systemic risk. So with that, we can go to the next slide, and I'll pass the baton over to David Parham to walk us through the project pipeline and give us kind of an overview of where things are going on, what's going on at SASB right now. So David, how's your audio?
I think you can hear me now. Can you confirm?
I can. Great. Wonderful.
All right. Good. Glad we sorted that out. Well, thank you, Jeff, and thank you to all the Standards Board's members for being available for this meeting. As Jeff mentioned, I'll provide us with a brief overview of our project pipeline, provide a few updates on projects that are not on the agenda for the meeting this morning, and then have a few comments on a couple areas of work that we have ongoing amongst staff here on the research team. So to go ahead and dive into our project pipeline, as I mentioned, I'll start by providing a few updates on some of the projects that won't be discussed during the board meeting today. But before jumping into that, just wanted to briefly touch again on the items that are on today's agenda. You'll see here from our pipeline slide that we have three projects, as you mentioned, Jeff, that are on the agenda today for decision, including our systemic risk and asset management project, our tailings management and extractives project, and our plastics risks and opportunities project. Items for discussion on the agenda include our content moderation on internet platforms project, as well as updates around our key governance documents, including our rules of procedure and conceptual framework. So we'll look forward to sharing the staff's progress on these projects, and of course, welcome and look forward to receiving the views of the board as we continue to make progress on these important areas of work for the team. Projects that won't be formally discussed as part of today's agenda include one standard setting project as well as three research projects. These include our raw material sourcing standard setting project being led by Taylor, the tobacco supply chain research project being led by Lynn, our alternative meat and dairy project being led by Devin, and of course our human capital management project being led by Kelly. So to quickly jump in and provide a few highlights on each of those, which are all underway and making good progress. For our raw material sourcing project, the project is progressing as planned. The staff has successfully engaged and reached out with a number of companies, subject matter experts, assurance providers, and investors with requests for consultative engagement. That outreach has resulted in a number of consultative meetings with many more that are scheduled. And the input gathered so far has been really useful, both with respect to the scope of the project as well as identifying potential further improvements to the standard that may be incorporated into potential future projects. So really some very robust feedback received from stakeholders so far. I will just note there have been some challenges in terms of stakeholder availability, which could have some impacts on the project timeline depending on the degree to which additional views and market input are needed to move forward with scoping potential revisions to the standard. However, just will note that there are several additional meetings scheduled that will occur in the coming month that may provide a sufficient basis of stakeholder input to move the project forward per the timeline presented here. So very good progress being made there, and thanks to Taylor for leading that project. Moving to our tobacco supply chain research project, consultations are ongoing. We'll continue through the second quarter with tobacco manufacturers and investors to assess the financial materiality of the supply chain management topic within this industry. The staff is planning to present a summary of findings and recommendations on whether to proceed to standard setting activities at the next Q3 board meeting. So making good progress and on track there so far. For our alternative meat and dairy research project, that has completed its first phase of consultation, which was primarily focused on reaching out to investors. We do plan to provide the board with an update summarizing information gathered to date, as well as our planned next steps in the next board meeting. Staff is beginning now the second phase of consultation, focusing on discussions with companies, and as mentioned, we'll provide an update on the findings from research and consultation at the next Q3 board meeting. And then lastly, our human capital research project. This is very actively being moved forward. Currently conducting some targeted consultation with our preliminary findings and analysis associated with our literature review. We're also, of course, in the process of engaging with you all on the board and soliciting your feedback on some of this preliminary work. We hope to complete these initial feedback sessions over the next month and then incorporate feedback into revising and further developing our human capital framework. And the next major phase will be to then initiate and move into a public consultation period to solicit widespread feedback from interested stakeholders on our preliminary framework. And we do plan to provide a brief update on the status and key milestones of the project at our next Standards Board meeting. So that's an overview of several of our ongoing work streams, and as well as what, of course, we have planned for today. I just did want to add a couple of additional comments looking forward to our subsequent meetings, as well as a comment or two on our overall resource allocation across the team. So as you can observe, the third quarter meeting may involve a number of updates and potential decisions relating to advancing work on several of our projects. We'll hear some updates on some of those projects today, including Ekaterina's update on the tailings management and extractives project. And of course, related to Greg's update on our content moderation project, we may be in a position for additional decisions in our Q3 meeting, depending on our discussion today, as well as work between today's meeting and our Q3 meeting coming up later this year. And then, as mentioned, Lynn may be prepared to provide a recommendation to the board in the Q3 meeting around our tobacco research project. So a few items that may be on the agenda for our next meeting. And then, as mentioned, we're currently planning to provide updates on a couple of our other ongoing projects in the Q3 meeting, including potentially for our alternative meat and dairy and human capital management projects. So it should be another robust agenda with several items for discussion, as well as potentially for decision in our Q3 meeting this year. In terms of our overall resource allocation across the team, we'd just like to note that, of course, like most of the board and those who are listening to the meeting, our staff has transitioned to a remote working environment. And generally, we've been able to maintain a high level of productivity and continue to advance and make progress on our key priorities and projects. I will say we did experience some challenges on certain projects due to disruptions associated with the COVID-19 and shelter in place, including the availability of key stakeholders to engage as part of our market consultation process. This is, of course, totally understandable and expected given the conditions we're all facing. However, I do want to state how appreciative and thankful we are for all of the stakeholders that have remained available and engaged in our work despite the disruptions that we're all facing. And That feedback has really been critical and incredibly valuable to our ability to advance on key projects across our portfolio of projects. And then we'll just mention that in addition to the projects here, of course, our staff continues to engage with the market on an ongoing basis and continues to monitor the evolving body of evidence related to the financial materiality of the issues that we address in our conceptual framework and across our standards. We expect that this will result in further expansion of our project portfolio as these projects move forward. And we believe that we will be able to balance resources across our existing and these new potential projects to maintain steady progress and ensure that we remain responsive to the needs of the market. So overall, we'll just say that we're glad to be making progress on these key project priorities and really want to recognize and thank the staff for their resilience despite challenging circumstances over the past few months to continue to advance these key areas of our work and ensure that we can remain engaged with the market and responsive to stakeholder input. So we'll pause here and see if there's any questions from you, Jeff, around the overall project pipeline. And then if not, have a couple other areas that I wanted to provide some brief updates to the board. But first, Jeff, would love to pause and see if you had any additional comments before proceeding.
Sure. Thanks, David. Thanks for the overview, and I'll also ask if any of the board members have specific comments as well. But let me just, by way of summary, just note that in addition to what you've identified as upcoming decision points that would be discussed at board meetings, which is one way in which the public can stay up to speed on the projects themselves, would also note that with the governance documents, those are probably the two projects for which we'll have public comment periods for the exposure drafts on those projects. So that'll be a great opportunity for the public to engage and give us feedback on at least those two projects. We don't immediately have other public comment periods coming up, but just wondering if you could sort of say any other way in which if you're going to summarize for those interested in projects how they could stay up to date with opportunities for engagement on those projects.
Great. Thanks, Jeff. Great question. And would point you to our website and our dedicated project pages that we have for each project, including contact information for the lead for each project, as well as the ability to sign up for updates associated with individual projects. And so we do strive to keep those project pages updated with all the latest information, including opportunities to engage, whether through consultative periods or when public comment periods are launched, to be able to provide official public comments. So would really encourage folks to utilize that aspect of our website. We do really try to keep that as accessible for folks as possible to ensure that everyone understands not only the range of projects that we're working on, but within each project, our current phase of work and opportunities to engage with us in any of these work streams.
Great, thanks, David. Yeah, Kurt, do you have a question?
Yeah, I noticed that the Human Capital Project, which is clearly a very large undertaking, runs all the way across the page and beyond. Any sense of milestones or points into the future beyond this chart as far as what we could expect to see?
Sure, that's a great question. Thanks, Kurt. So really tremendous amount of progress that's been made on that project that Kelly has been leading. As mentioned, the first portion of the project was this literary review phase, which Kelly has completed and has synthesized into an initial preliminary framework. We're doing some targeted consultation with that framework, really trying to move forward in a measured and deliberate way towards a public consultation period, which we are hoping to initiate later this year, looking around the Q3 timeframe. That'll be a really great opportunity for us to engage with the market and really get a widespread set of engagement and views from market participants. Really an important period that we'll continue to keep the public updated on as we progress towards that. That'll be a really important piece for getting feedback on some of our initial conclusions based on this extensive literature review and potential implications for the standards based on that review. And then following that, we'll incorporate that feedback into finalizing the framework Obviously, the time to complete that finalization will really, at least in part, be dependent upon the feedback that we get during that public consultation period. But we anticipate, a quarter or two into the subsequent year, depending on how much additional work we identify will be needed based on the results of that public consultation. So making good progress, but of course it is a important project with lots to be considered and evaluated. So we want to be, make sure that we're being very intentional and deliberate with our progress there, which Kelly is doing a great job of.
Yeah, and certainly with the COVID and work from home and all the changing balances of the the social contract, it is a moving target to some extent also, huh?
Very much so, Kurt. Yes, there's a lot of implications for that project based on many things that are ongoing and incredibly important today, including the impacts of COVID. So, as you said, it's something where we're trying to best adapt to new evidence as it arises on a day-to-day basis, as well as continuing to make progress toward a successful resolution of that project in the next several quarters.
Great, thank you.
Thanks, Kurt.
Mark, do you have a question?
Yeah, David, can you clarify for me? I think you alluded to this. So for projects where we don't have we currently don't have an exposure draft, but we're currently in research or, or like human capital, where you're saying we're obviously doing engagement with people and you're reaching out to people proactively. But if investors or companies in those spaces have not yet been reached out to by the SASB, is it okay for them to reach out to the project lead proactively on their own, or should they wait for the should they wait for an exposure draft to try to engage?
Thank you, Mark. Would encourage folks to reach out to project managers to understand what opportunities for engagement exist. For example, there may be phases where we always welcome market input, to be very clear. So we would encourage folks to reach out to project managers to learn more about the project and opportunities to engage. As you mentioned, Mark, there are certain phases of more intentional feedback, whether that's a public comment period or a public consultation period. And so, of course, we'll put that, we'll be sure to communicate that broadly so stakeholders understand where these key points in projects are to engage as part of the ongoing work for research and standard setting projects. But as mentioned with the project website, in each project page, we're trying to be as transparent as we can around and as clear as to each phase of the project, as well as opportunities to engage on the project, including publishing consultative briefing materials and so on. So really would encourage you to reach out to project managers if you'd like to be engaged, and project managers can walk you through each particular project plan to help understand what the key points of engagement will be and how you can most efficiently and effectively engage with us, but always welcome inbound interest and inquiries into our projects, as well as feedback from stakeholders.
Okay, why don't we go ahead and keep moving on this, David?
Sure. Great questions. Thank you, everyone. So just a couple additional slides I'd like to run through briefly. First, just following up on the comment from Kurt, just taking a few minutes to discuss our work around understanding the implications of the COVID-19 pandemic, as well as the global response to the pandemic for our work. Unfortunately, won't have time on the agenda to go into a great deal of depth, but do want to point folks in the audience to a recent blog that we published that includes some of our thoughts around the implications of the current pandemic for our work. A few items I just wanted to highlight for the board. First and foremost, we recognize the pandemic, as well as actions in response to the pandemic, have a diverse range of ESG implications. As Kurt, as you mentioned, one of the most prominent relates to the impacts to people, and particularly to elements of the workforce, for example, whether it is maintaining the safety of essential workers, benefit and support systems for employees who have gotten sick or have been exposed, various types of disruption to ongoing working environments, economic hardship as a result of shelter in place, and really a myriad of impacts for people and for workforces. And of course, these issues are incredibly important, and as we briefly discussed, of course, relate in many ways to our ongoing work with our human capital research project. I also wanted to note that the ESG implications go beyond human capital. There are impacts, for example, in our business model and innovation dimension, including impacts, of course, within supply chains, interruptions to the ability to source key materials, how business models may need to change to reflect, for example, increasing remote work and/or, contactless methods of interchange. There are, of course, other social implications, for example, the increasing prominence of issues such as data security and data privacy in a remote working environment. And then there are environmental implications, including what we have observed in terms of a sharp decrease in greenhouse gas emissions and energy usage associated with shelter-in-place activity and the economic implications of efforts to respond to the pandemic. At the same time, restrictions have also resulted in the rollback of some environmental regulations, for example, those designed to limit the use of single-use plastics, for example, in some markets. So of course, and then lastly, I'll just mention there are implications for our leadership and governance pillar, including issues around business continuity planning and crisis management. So really just a few examples of the diverse and complex and really important ways in which COVID-19 relates to the work that we do at SASB. And as we note in the blog, we really welcome and encourage stakeholders to engage with us to help us analyze and understand how these impacts have affected companies and investors, how they are observing the ESG implications of the pandemic, and of course, ultimately, how this might inform our agenda moving forward. And to just touch briefly on that, we are, in terms of what we're doing on the research team, I just wanted to note our approach involves a combination of top-down and bottom-up research. From the top-down perspective, we're monitoring the impacts of COVID-19 and its ESG implications broadly, and really trying to map and understand this evolving body of evidence to our taxonomy for issues across our sustainability dimensions and our general issue categories to understand the ways in which the pandemic broadly is resulting in specific ESG impacts within different companies and across different issues. As mentioned, human capital is one dimension that is particularly impacted. And of course, we have Kelly leading a project there for our broad top-down efforts to monitor the myriad and diverse impacts of COVID-19 on ESG. We are fortunate to have Gail, who's leading this effort on behalf of our team. And given the rapidly evolving body of evidence here, really want to thank her for taking this on behalf of the team and recognize the work that she's done to ensure we're really maintaining our focus on these issues and working to build out evidence that may ultimately inform our agenda. And then just want to note that, of course, our team is constantly in contact with the market, engaged with the market. And so, of course, the impacts of COVID are naturally being surfaced through our ongoing stakeholder engagement. That being said, as we note in the blog, we really would welcome feedback from our stakeholders on how they're observing the impacts of COVID-19 and how it relates to the materiality of ESG issues for their company, within their industry, or even broadly across the economy. So an area of active and ongoing work for us, and just wanted to share some high-level updates on this with the board. In the interest of time, I'll move just to my last slide here and touch on this briefly, and then pause briefly for any final comments or questions. So just wanted to mention one last topic around the area of technical corrections. This is some work that is ongoing as part of our pre-agenda work, and specifically we're working on developing an approach to implementing technical corrections, an item which has come up in past public meeting discussions with the board. As the board's likely aware, the standards represent a significant volume of content, nearly 1,000 metrics across 77 industry standards, each with a detailed and robust technical protocol. And as an increasing number of companies are using the standards, we're of course receiving feedback from the market that occasionally surfaces technical issues associated with the standards. So we're in the process of developing a process to, or a procedure to address such technical issues in the standards by both raising these issues as well as resolutions to them to the board. Many of these issues are narrow in scope, often relate to a correction or clarification that really doesn't alter the intent of a metric or technical protocol, but does improve the accuracy of the guidance provided in the technical protocol. So these clarifications are typically straightforward, targeted, relatively simple to implement. We don't expect this to be a significant volume of items, more on the order of tens of items rather than hundreds, for example. And we believe that it's important to have a process for this and necessary to maintain the standards on a semi-regular basis based on our own ongoing work related to the standards as well as market feedback. So the time period for implementing these corrections is part of the process we're currently developing, and we'll of course include this in our process proposal. So we just wanted to flag this item given it's come up a few times in previous discussions with the board to provide a brief update that this is being worked on by the staff and we are actively advancing, developing the process for this technical corrections issue. Of course, would welcome continued feedback from stakeholders that identify these technical issues to us, and we'll note that we are tracking these internally to ultimately address through this process. So,
hey, David?
Yes, please.
Just a quick question. It sounded from your comments like most of the problems that get identified or come out in the use of the standards. Am I hearing that right? That most of the time when we find something that needs to be corrected, it's because it's been discovered by a user, or is there also an internal process for tracking this?
Sure, that's a good question. So in many instances, we get really good feedback from users of the standards as they're seeking to implement the standard for reporting purposes. And that's really just a fantastic natural touch point that we have with the market in terms of they're seeking to implement the standard in their external reporting and identifying opportunities to further strengthen or enhance the standard. That being said, as our staff is conducting our research and looking at potential revisions to the standard, this can include looking at potential opportunities or issues to further strengthen or clarify the standards, but would say that we really appreciated and had some fantastic feedback from folks who are implementing the standards that are continuing to help us understand how we can further enhance and make them as useful as possible for our stakeholders.
So it sounds like with the expanded uptake, we need to formalize this to some degree, have some just sort of steady catchment and triage process to get these fixed without having to kind of go to a board vote every time.
That's a very good statement. Yes, that's a good way to summarize.
Yeah, I think of this partly as when we made our decisions about what should be in the content of the standards, we had a particular intent in mind, and sometimes the words that we use are not going to be understood in the way that we intended them. And so there are opportunities as people ask, like, is this what you meant by this, or is this what you mean by that, or what do you mean? And it's an opportunity potentially without changing the intent of the standard for us to improve the applicability, the comparability of the information that's being produced by clarifying some of the language.
Absolutely.
Great.
Thank you, Jeff.
Thank you.
Great, Jeff. Unless there's any other items, I'm happy to advance the slide here and hand it back to you, Jeff, to set us up for the next session.
Great, thank you, David. Appreciate your work and for giving us an overview here as well of what's been going on, at SASB over the last few months. So with this, we're going to move now to the topic of content moderation on internet platforms, which is one of the ongoing research endeavors that we have at SASB to potentially lead to standard setting implications. And our lead on that is Greg, who is here with us. So Greg, assuming that audio is working, the floor is yours.
Great, thanks so much, Jeff. So let's see, I think it looks like I do have control here. Great. So a brief overview of what we're going to use this session for. First, quickly kind of review some of the feedback gathered thus far during this consultation and research phase. Also, what we'll be looking at this kind of initial draft of my taxonomy that I put together, where we cover how we're looking at these social issues attached to content moderation, as well as the relevant business activities. And this third bucket is where we'd really like to spend most of our time, particularly the standard setting bucket here. So certainly interested in board feedback on the taxonomy, and have already received some really helpful stuff from the board book, but hoping to use this public session to talk about and get a feel for board views as we think about potentially pursuing standard setting in one or more industries related to this. So a quick background of this research project. I came to the board at the end of 2019, amid a lot of media coverage of this topic. I'd say that kind of traces back to probably the 2016 US election, Brexit, and other events there related to user-generated content, disinformation, hate speech, really kind of a part of a huge mix of issues that we didn't have a lot of clarity on. So I came to the board with some research on about 3 different companies, specifically 3 social media platforms where there was already some evidence indicating some financial materiality, but not really a very clear view of how we might categorize these more broadly. So and as well, just so many different issues here. How do we parse them there across different business segments? So the outcomes we're looking for here is really to zoom out and understand what issues are we talking about and where do they apply? How do we think about them with a SASB lens in terms of our general issue categories, which we see in the materiality map? And then from there, make a decision, or at least I would make a recommendation to the board, I should say, around whether it's appropriate to pursue standard setting in any of these industries. So quickly on the timeline, about half a year into consultations, which have been really great, as you'll see in the next slide. Lots of diverse input there. Been working on this taxonomy. We've reached a draft phase, so may be appropriate to kind of stretch out this purple arrow a little bit further, because there will be continuing edits to that in alignment with board feedback and as I speak to more stakeholders. But at this time, also really starting to dig in and understand, what a bit more around some of this stuff in an industry-specific nature, so that we can start making some recommendations to the board on standard setting. Oops, and let's see if I can go back one here. So consultation period, really was able to zoom out significantly and get a lot of different input, not just from social media platforms on the issuer side, but also other platforms like ride-hailing platforms, gaming companies, providers of public cloud services and other cloud-based services, kind of in this second layer of internet infrastructure, as well as internet service providers in the telecommunications sector. So pretty broad understanding starting to emerge from there. As well, investors, very broad, asset managers and asset owners, and inside of that asset manager group, really a mix of stewardship professionals and portfolio managers and industry analysts. Lastly, some really interesting feedback from subject matter experts from a couple of different disciplines. So I think kind of high level, I think it's pretty clear that investors are very interested in this issue at social media platforms specifically, and beyond that, I would say really the largest social media platforms, as we'll probably talk about a little bit more in depth in a moment. There does appear to be a relationship of the scale of a platform in terms of the number of users it has with the size of potential social externalities attached to it. That said, I think across the board interest in all sorts of social media platforms of all types, given especially when they're hosting user-generated content, it really is just a part of the business, deciding where you're drawing lines around this stuff and what's permitted and what's not. Also a variety of viewpoints in terms of the nature and magnitude of risk. So some investors I talked to were really cognizant of the regulatory angle here and how potential regulatory momentum would have massive impacts on business models. Others saw this as more reputational. Others would know just the cost of hiring the personnel and investing in these systems to perform content moderation work is really significant. So a lot of different views there, which is interesting, starting to parse through some of that. I'd also say that a lot of the experts I spoke to really do think that this issue of trust and safety on the internet and content moderation even is a lot more broad than just applying to social media companies. And we do the research I've done has indicated that there are quite a few examples of this, and we can speak to that in a slide or two. But I think one interesting piece here is this idea of the trust and safety function at technology companies becoming more and more prominent. And I think that is an interesting one as well. Just some of the people I've spoken to saying that this is similar to where cybersecurity professionals were 5 to 10 years ago, in terms of not a lot of clarity in terms of the amount to invest and what the role should be, who do you report to, all of that. This is an emerging function with a lot of interesting developments from there. Jeff, you have a question? Great. We just get to see you. Excellent. So the taxonomy, I have approached this in putting it into 3 different buckets of kind of social issues, social themes, externalities. In the middle of the slide, we have some examples of that, and on the right is the general issue category where we think that this might apply from the SASB lens. The first theme here being harmful content, really just the idea that there are bad actors that use the internet, and the things that have really the internet has enabled a lot of really positive communications and delivered a lot of value, but those same tools are available to people that would use them for bad. So we see here incitement of violence and hate speech, child exploitation material. The internet has really kind of driven that up to new highs and pretty alarming growth in terms of the reports that we're seeing there. That some of those numbers may just be because these companies are getting better at capturing that and in reporting it, which is good news, but alarming increases nonetheless. Also worth mentioning here that in this taxonomy, we actually put some certain types of misinformation into the harmful content bucket. And I think as we'll talk about the second bucket as well around freedom of expression, it applies there, but as well here in terms of there are certain examples of misinformation that do have real life negative consequences. I think a good example of that would be declining vaccination rates that have led to really the reemergence of diseases that we had pretty much eradicated in many countries, and a lot of that has been tied to increasing resistance to vaccination that's been spread over the internet. So I think an example of misinformation there. The second bucket, user privacy and freedom of expression, has been covered in SASB already, but only through the lens of how do companies kind of manage privacy and freedom of expression on that side, really with their relationship with governments in terms of what kind of information at the request of law enforcement are these companies providing. This is a little bit different because it's as opposed to whether it's allowing access to governments, are the companies themselves potentially doing a bit more of policing of speech or some of these other things. So a little bit different. And I think it's just important to note here that these content moderation decisions, or if you're a cloud platform, the decision not to do business with somebody, that can actually lead to consequences. So second order consequences of the moderation itself being a distinct bucket there. The other distinct social externality that we've identified here is related to employee health and safety, or worker health and safety. We're seeing evidence that the performing this work and reviewing harmful content at scale and for extended periods of time has been tied to development of really harm to mental health of the workers performing that work. So it's an interesting one. Also worth noting here, I would say employee health and safety it's a pretty neat fit, but it's worth noting here that especially the large platforms do a lot of this contracted through third parties, meaning that they are not direct employees of the social media platforms themselves. So if we take these 3 key buckets and look at them across a couple of different verticals, this is kind of a visualization of what we've come up with the taxonomy for this initial draft. I've mentioned social media platforms a lot in terms of areas of investor interest, and I think that is where we see these 3 issues applying pretty much across the board. I would say, however, with the worker health and safety, that one does appear to be related to scale, that it really requires a very high volume of user-generated content potentially before we see workers and having these impacts, or at least that's what we've seen reported so far, and we're starting to get an emerging picture of. I've put messaging services here as a second vertical. It's worth noting that there is some kind of blurriness between what a social media platform is and what a messaging service is, not just because a lot of media platforms will have messaging built into their products, but as well, if you have a really large messaging group, that could potentially have as much reach as a social media post that was only seen by a few people. So harmful content in this context would be encrypted messaging, obviously a very attractive way for people using illegal content to share that content, so like child exploitation material, for example. A little bit different here as well in terms of how user privacy and freedom of expression applies across these different things. I think with the social media platforms, we're really thinking about where does a company draw a line on acceptable speech. That can really be based on a company's viewpoint, but as well as the geography in which they are operating. I think really kind of two poles here would be the United States companies taking a pretty strong stand, or just having one approach of really permitting most speech, and really kind of wanting to see very specific reasons not to, specific reasons to take down said speech. On the other side, we see Chinese platforms where this is very different in terms of what acceptable speech is, on even a legal basis is very, very different. Gaming publishers and platforms, interesting developments here. Some interest from investors as well. Obviously, there's messaging that happens on these games. These gaming platforms are communities online in themselves, and these span across not just the games, but into other areas as well. I've seen some interesting examples as gaming platforms start to kind of, in some ways, mimic traditional media. They are seeing some questions there as well. So some interesting isolated examples. On cloud services, this is an interesting one, certainly in terms of balancing the digital security and privacy of your customers while being aware that there might be harmful uses there. One example I think could be if you're a website builder and you allow people to build tools, do you want those tools to be used by someone who's espousing a hateful ideology? I think it's a tricky question, a little bit different from content moderation, but nonetheless I think relevant when we're thinking about freedom of expression on the internet. Outsourced services here, just pointing out those third parties that work with social media platforms to do this content moderation work, and that's where we see this worker health and safety angle. And lastly, ISPs feature here, a little bit different given that they're, again, another layer below even the cloud service providers in terms of they don't generally host content, they more just deliver it. So really interesting implications there. So with that, I want to pause, as I know there's a lot of information. So curious if we have any discussion points here around the taxonomy itself, areas of clarity, any board members wish to weigh in?
Yeah, so I know we're not diving deep into the discussion of the taxonomy today, so I don't want to take too much time on this because we have limited time for the questions that you want to address. But I do just want to note, I don't know if you want to go back 2 slides. I would just note that you have for the GICS categories, or general issue categories, around harmful content, focus on product quality and safety and customer welfare. I mean, this really seems like we're thinking primarily through the lens of the direct users of the platform. And when I look at some of the content there, like hate speech, incitement of violence, the child sexual abuse, and misinformation, it seems to me that in all cases that there are like the victims of sexual abuse or societal externalities more broadly to be concerned about. When something that starts on an internet platform spreads through word of mouth and leads to your example of vaccinations was an appropriate one. So I just want to just make sure that you, in thinking about the evidence of financial impact and the investor interest in this topic, to make sure that the social externality part of this, that is sort of beyond the direct users of the platform, is going to be, if to the extent that it's there, that it's captured inside the taxonomy.
Thanks, Jeff.
Verity, do you have a comment, question?
Yeah, I also wanted to raise the question. This slide is really helpful, and it seems like what's developing now is a real understanding of what is within the control of the companies that this taxonomy would apply to. And so when we think about our conceptual framework and the principles for topic selection and how these 3 themes could potentially lead to the right topic, one of the areas we have to be mindful of is to design topics that are actually actionable by companies. And the 3 themes laid out here, it seems like harmful content is something that they'll always be chasing because it's provided by users rather than typically generated by the disclosing company. And worker health and safety, you pointed out that is typically contracted through third parties. We might find that's different in smaller scale companies, that's maybe an open question. But that middle theme here with user privacy and freedom of expression does seem to jump out on the page as something that is truly within the control of the entity that might disclose on this issue. So I wanted to put that on your radar.
Thanks, Verity. I think one thing I wanted to say as well, just on this, is just how incredibly difficult this work is. I think I forgot to just kind of name that. I think just really trying to draw that line and enforce it. I think if I've learned anything, is that is just a huge challenge. Dan.
Yeah, I don't want to stop you on the taxonomy, but I would just note that, to me at least, there are questions about whether privacy and freedom of expression should be combined, or whether they would really have to be dealt with as separate themes with raising separate issues and ultimately separate metrics.
Thanks, Dan.
All right, Greg, why don't we keep moving, because I know you want to spend some time on the specific questions.
Yeah, well, I think we've started to speak about this a little bit. As you may have gathered from this presentation, I think it is increasingly likely that the staff will recommend to the board that we pursue standard setting in the Internet Media and Services 6 industry, based on the evidence that we've gathered and the input from our stakeholders. So this is still, I'd say, mostly been focused on large-scale internet platforms. You can probably name the top three, all of us, but also curious here whether or not, as we kind of move forward in evidence gathering and consultations, how much time to allocate towards potentially smaller social media platforms and their views on how this topic applies to them.
Yeah, thanks, Greg. I mean, very curious to hear what my fellow board members think on this, but for me, partly it's a question of what it is we're looking for. If you're looking for whether standard setting is warranted, we would generally think about the importance of an issue partly being from the perspective of like market cap and sort of size, scale of operation. So I think starting with the larger firms as you have makes a lot of sense here. And that may be sufficient, depending on what the conclusions are there. That may be sufficient to say we need to do something. For me, it then becomes an issue of, well, to what extent would we feel like the resulting revisions to the standards would be applicable for other firms, not just the largest firms. And if there's a way to then factor that into the structure and guidance within the standard, that we can get something that's most useful across the spectrum of size of companies, I think that would make a lot of sense. But that's partly how I would see it. First, is it above the threshold to say we probably should do something because of the size of the issue and the likely materiality for a large part of the industry.
Thanks, Jeff.
Yeah, Mark.
So I'd agree with Jeff. It is definitely helpful to sort of understand what's going on in the big companies first, understand the magnitude of the issue there. It would help me a little bit to understand the magnitude of the issue at smaller or medium-sized companies, because I don't want to think, whatever standard setting there may or may not be is going to have to endure over time. And and so if we just think it's important for 3 companies today, but in 10 years there's only 1 company, would we have this needs to endure? And so if we understand that this is an issue not just at the big players, but it's an issue that's emerging even in the middle, that would be helpful to me to sort of know whether the standard setting itself would endure.
Yeah, just related to that, just given the nature of the internet, things that have happened in the past when you were a small company might linger around to the point where you become a larger company, and it could be an issue. So it's just something to think about in the fact finding that you do, whether or not that's something that gets considered when some of the smaller platforms are up for consideration to be acquired by a larger company, or just as they grow. Yeah, Kurt.
Yeah, I think one other benefit of discussing and investigating the smaller companies is they don't have the resources and the funds to do the kind of brute force reviews perhaps that the larger ones do. So it may well be that there is innovation and a whole different approach to dealing with this, or other thresholds that might enrich the topic a little more. So I think it would actually help round this out and see how to companies that can't have
4,000 or 5,000 people reading every message kind of a thing manage this. So sometimes innovation happens at a smaller scale, and that might help give us a better view of the future.
Thanks, Kurt. Moving on to the next topic, if that's okay, Jeff.
Sure.
Greg, very briefly before we move on, I just want to recap what we heard from the board. So we heard a couple key points. Number one is that there's the possibility that the evidence based on the large scale companies could in and of itself be so compelling to warrant standard setting. However, as Jeff noted, and then as both Mark and Kurt echoed, that they all shared a view that it would be helpful to better understand how this issue plays out at the smaller firms. And they noted a couple of specific reasons, including how the issue may develop or manifest in the future. And then secondly, around just management of the issue, how different resources available to smaller companies are to manage this issue, and how that may impact the case for materiality and really ultimately management. If that sounds right to you, Jeff, then appreciate those board views, and let's keep moving forward.
Yeah, that's how I understood it. And I would just note that I think we're happy to leave it to you and the team to think about what's most appropriate to do at which stage of moving forward with this, whether before we move specifically to approving a standard setting project, or if it's done better before or after that. As you think through the implications of this, we'll trust your judgment on that until the next decision point.
Great, thank you.
Great. Next up, really interested in, I think it might be easy to get kind of too general with how the board views regulatory policy, but I think this area specifically, we are very aware of a lot of momentum and in a number of jurisdictions around how platforms are dealing with online content and to what extent, if any, they should be liable for user-generated content. Or content that passes across their services or their networks. So curious as to how board members are thinking about this, given the fact that the ground could move underneath us here in terms of if we take one approach or another based on current regulations, which would assume that platforms will not be in any really liable for this type of content.
Thanks. Bob, do you have a comment on this?
Yeah, so Greg, I mean, the comments I provided to you on this, which I'd like to get other reaction to, is, we're always going to have this issue of possible regulation coming up, and that we're going to get trumped by that regulation, and what we've developed might be behind. But I think our approach, which continues to be this, this market impact, talking to investors, talking to issuers, doing our other research and really sorting that out, I believe that process, we should be guided by that process. We should always be aware that there are regulations there. I know that one of the tenets we have is we don't want to, reinvent the wheel. If there's some other regulation that's in place that makes sense, fine. But my personal view is we should continue to move forward with our process of getting, market-informed impact, and then with our board and staff, determine if what we found is significant enough to continue to move forward and develop our standards.
Thanks, Bob. Yeah, I agree with that. One way I would think about this is that the looming potential regulation is something that's going to create probably a lot of immediate investor interest. And to the extent that we actually want the standard that results to be useful and a bit more evergreen there, the way I would think about it a bit is, given the scope of potential regulation that we might see on the horizon, to the extent that we can engage with companies, we can engage with investors and understand, how would you manage this issue if there were no regulation? And how would you manage this issue if, sort of like the extremes of some of the things that we're hearing proposed, end up actually being realized? And then also from an investor perspective, how would that affect the way that you would view the channel of materiality, financial impact? Is it then just through legal sanctions that might result from a firm that doesn't comply with regulation, or is there is there something else that you'd still be kind of thinking about? So that's the general approach I would take with it, is think about how the potential regulation would end up, whether it's realized or not, then how that would affect the way it gets managed and how investors would be assessing potential risks and opportunities related to the management of those topics.
Great. Thanks, Jeff.
I have one quick question as well, or maybe a comment building on what Jeff was saying, that we can, I think, count on differential regulation around the world. If you look at it from a global perspective, France, People's Republic of China, the US are all handling social platforms very differently. So I don't think, even if you had harmonized with one regulatory regime, you couldn't harmonize with all of them. So that suggests to me that it's important to stay with our foundation, thinking about financial materiality, thinking about the likely impacts of the imposition of externalities. And thinking back to your earlier classification, I think particularly the impact on workers is probably the clearest externality, because that's the one where the people impacted probably have the least choice in the matter. So those are areas where you can get unpredictable regulatory responses, because political consciousness will be raised by a seemingly random event, and then everyone's in catch-up mode. So asking companies to disclose their exposure to these risks, I think, is really sensible. And it sounds to me like some consultation with the financial community about the nature of their particular concerns around this industry would be really worthwhile.
Thanks, Lloyd.
Greg, this is Bob. I might ask you to comment on another aspect of financial impact beyond, the regulation piece. In the research you've done to date, are you aware of any work out there, or seen any research or publications that link negative contact publicity? So something happens at one of those organizations, it's for whatever it's seen as negative, and any tie into a reduction in advertising so that revenues would go down, or a drop in the stock price, which means valuation goes down. So we've seen any connection of that to financial impacted companies?
In short, yes. I mean, I think it's challenging with some of these companies. Some of the most the financial performance has just been, from a valuation perspective, has been pretty unbelievable over the past 10 years. So I think it's hard to see it in stock price. I would say, actually right now, we have the largest social media platform dealing with advertisers who are pulling back and boycotting. I think it was several outdoor brands have recently announced that they will not be advertising on the platform next month. More historically, there's been a lot of examples, especially about one video sharing platform that has been dealing with this quite a bit, because I think it's really about brand safety concerns for a lot of advertisers who do not want their brand appearing next to potentially harmful content or offensive content. So I think the short answer is yes, especially on, I think that video platform, we've seen numerous occasions where it's been reported that advertisers have, albeit potentially temporarily, pulled back until they were receiving assurances that there was more to be being done around the controls of which types of videos get their advertisements shown on them. So a lot of investments by that company in particular in controls around, how many followers do you have to have before you get, I think that's the main way they've done it, additional, basically saying you don't really get monetized, you don't get advertisements on your videos until you reach a certain point where we think you're big enough that you're probably not, showing kind of terrorist content or something like that.
Thanks, Greg. Mark's got a question. Before I go to him, I just want to make sure that all the board members, whether they've got camera access or not, do have the opportunity to weigh in on this question, or sort of, if not, that's fine as well. But make sure that Verity, Elizabeth, Stephanie, to the extent that you want to weigh in. If you aren't using your camera, just go ahead and jump in through audio as well. Mark?
So just real quick, I think just building on what others have said, I think Lloyd is right. You're going to get different regs around the world. And Bob's point is just to say this another way, if you come to the conclusion as a staff that this is financially material, even in areas where it's not regulated as such, if you find that investors still are finding it material, any potential regulations would likely only add to that materiality, and therefore, so if you even find that in places where it's not regulated, it's still material, that could add to your conviction about whether standard setting is needed.
Thanks, Mark. Verity?
I also want to pile on to the good angles Bob was bringing up, and really kind of suggest a productive way to explore this question is focusing on the financial materiality of the type of content. So really kind of differentiating between advertisements versus users. So non-revenue associated content provided. I think that would be a productive path to pursue.
Thanks, Verity.
Thanks, Verity. Dan?
Yeah, I mean, just very quickly to add to what I think one of the points Bob made at the beginning was it seems to me that many of the issues that we look at for standard setting are subject to being changed by potential regulatory changes. If we let that be a block, we'd be able to do very little. So I would agree. Perhaps this has more of a risk of regulatory changes than some others, but I would agree that shouldn't be a reason for not proceeding here.
Great. So unless there were any other questions, perhaps we can move on to question 3.
Maybe I'll just very quickly summarize, unless there were any other board questions or comments here. So just very briefly summarizing what I think we heard from the board is that acknowledging that regulations are more of a looming factor rather than a current kind of in play factor right now for these companies. We heard very little to no hesitation from the board that should be something to slow or stop staff down in terms of evaluating the body of evidence and the channels of financial impact. But specifically on channels of financial impact, we heard a lot of interest from multiple board members to better understand what those channels are, the nature of financial impact, the distribution of risk, the probability and magnitude of risk and impact. And we also heard a couple other comments around better understanding impact to revenue and advertising spend by customers and whatnot. I think a lot of those comments and a lot of the themes that we heard tie back to just doing more work to take a view ourselves as staff and communicate with the board what in fact the channels of financial impact are, how the looming regulatory risks or factors kind of relate and impact those channels of financial impact.
Great. Yeah, that sounds right to me. Thanks, Brian.
Great. And our final item for discussion here, we've heard a little bit on this, but also curious to hear board views on worker health and safety. I would say that this appears to be more on the emerging end of things in terms of potential financial impact. Really, there's not a widespread understanding of how to set up a safe work environment for people who are looking at this content. Really important work, but also I think a challenge here. So there could be some financial impacts attached here, and just be curious on any views on to what extent, really keeping in mind that isn't just the fact that there are humans doing the work, but also really the health and safety piece of this. I was curious on whether there are any views here as to how to think about that and what lens to use when potentially weighing standard setting.
Yeah, thanks, Greg. It's a great question, and it's a tricky one in some ways. I think it sounds like you're thinking the right way on this. The way I sort of approach this is I think that not every important issue in the world is going to be best addressed through a private sector effort, because those aren't always the best channels. That's why we have, why we have regulation, why we have legislation, why we have NGOs that are focused on trying to address particular issues, and so there are lots of mechanisms out there to address important issues. So for this one, I think it's important to understand, how is the industry structured, and to the extent that there is, a potentially financially material impact to managing this well or not for certain companies, and it's a pervasive issue for those companies, then that is a great opportunity for potential standard setting to help to address it. But that's how I would think through this is, based on current practice, existing industry structure, does that seem like this is going to be an effective channel? Is financial materiality going to be a lever through which we could address that? So, Elizabeth?
Yeah, can you hear me okay? Okay, yeah, I was just gonna say I agree, and Greg, I reached out to you about this particular topic as well. I think what would be helpful to understand is, above and beyond other health and safety issues for this particular audience, what does this particular topic bring in terms of a challenge, and then also a cost or whatever else we might see from a materiality perspective. As I pointed out to you when I reached out, I don't quite get this yet. So, just understanding the causes and effects and how that's, like I said, above and beyond what else this particular audience is dealing with will be important, I think.
Thanks, Elizabeth. Stephanie, you have a comment?
Yeah, for me, I think we might need to separate direct financial impact with reputational harm, given the stories that we've seen with the workers who are reviewing the content. And also, there may be some element of, to analogize to the food industry, whether this is part of their vendor base or supply chain versus, some companies may have these people hired directly as employees or contract with them directly versus going through a third party or a firm. So I think understanding the structure a bit more may also be helpful to understand the materiality for this particular industry.
Great, thanks, Stephanie. Okay, I know we've used a little extra time more than we were planning for this, but I think it's been a great discussion. So why don't you go ahead and just kind of wrap things up the last few slides there.
Great, thanks, Jeff. Really interested in continuing consultations here, probably with a bit more of a focus on the internet media and services industry at this stage and social media platforms inside of that. I'll also be reviewing this draft taxonomy with stakeholders and the board members as well. I've gotten some really helpful comments there and hope to receive more. Be using those as inputs to revise the taxonomy, do a bit more work on financial impacts now that we've kind of gotten a base of the social issues, really kind of starting to detail a bit more here, the channels. And as well, current disclosures, investor views on current disclosures, I think is an interesting topic that's come up a few times in consultations. I think I have a bit more work to do there. And I think it is more likely than not that I will have a draft of a standard setting proposal for the board at a future meeting. With that, it looks like, Brian, do you have anything you'd like to add here?
I think you're
muted.
No, that's great.
Make sure that we're aligned on that last question. You want to take your perspective on that?
Yeah, perfect. Yeah, thank you, Greg, and thank you, Jeff, and all board members. I would welcome any other comments or questions for Greg or staff here. And just noting on that last question related to worker health and safety, I think it's fair to note that we saw some hesitation from board members in that there would be a strong desire to better understand the case for financial materiality associated with that issue, and really direct acknowledgement that there can be very important sustainability issues or societal issues with meaningful or significant societal impacts, and then ensuring that we're staying disciplined and focused on the case for financial materiality. Just a couple other points raised around insight into better understanding if there is a clear case for financial impact and evidence of such, if it's more about direct financial impacts or reputational harm, and then also a little bit of encouragement on better understanding around industry structure issues like the outsourcing of these types of responsibilities and how that then manifests into the channels of financial impact. So appreciate those board member views. Please speak up if you feel like we captured any of that incorrectly. And then again, just thank you for the input from all the board members, and welcome any other questions or comments on the project.
Great, thanks, Brian. Thanks, Greg. So I think from here, what we'll do is we take maybe just a few minutes. We've had people for hour, 15 minutes, so we can maybe take 2 minutes here just to transition. So we'll come back. Let's come back at 20 after the hour.
Great, thank you.
Okay. Thanks everyone for sticking with us through that break. It was not sponsored, so we didn't have any advertisements for you, but we should think about that for a future way to subsidize the work that we do. We'll be moving now into the next of our topics for this morning for discussion, and this is going to be a discussion on our our governance documents, which relate to the conceptual framework and the rules of procedure, we can go to the next slide. In fact, our lead on that is Shivani Kukrecha, who's been handling that, and we appreciate her being here today. So Shivani, if your audio is all good, I'm going to pass it over to you to walk us through the discussion today.
Awesome. Thanks, Jeff. So hi, everyone. My name is Shivani Kukreja. I lead the Conceptual Framework and Rules of Procedure project. And today, I want the Standards Board to discuss a few things related to these projects. But before I go into that, I want to remind everyone what these two documents and projects are all about, and what's been done so far with each project. So let's start by discussing the two documents. It is so important to acknowledge that the Conceptual Framework and Rules of Procedure are complementary documents. So as this board knows, SASB's Conceptual Framework document articulates how SASB thinks about and discusses its approach to sustainability accounting and standard setting. The Rules of Procedure document then translates aspects of SASB's approach that are outlined in the Conceptual Framework into specific operating procedures and due process practices. So I don't think there should be any surprises there for the Standards Board, and I know we've discussed this internally, but I do just want to pause and see if there are any questions or anything to add here, because the complementary relationship between the two documents is an important piece as we progress the project. So Jeff, anything to add here?
Yeah, I mean, it's you know, it's a little subtle, you know, but it is an important distinction. The way I sort of think about these is that our conceptual framework is our dictionary. It's our philosophy. It lays out how we think about things. The rules of procedure is almost more like a roadmap. So, you know, when we do specific standard setting activities, how is it that we go about doing that? What are we going to hold ourselves to in that respect? And so it's a bit narrower, less philosophical, more operational. But yeah, you're exactly right. These are complementary. So hopefully that's clear to, I'm sure it's clear to our board, but also clear to others as well.
Mm-hmm. Thank you. And now let's go through a brief recap on what these projects are. So as a reminder, the Conceptual Framework project aims to further strengthen the Conceptual Framework document. The document was written in 2017 and it's now outdated. So by the end of this Conceptual Framework project, everyone should expect a revised Conceptual Framework document that will help guide the work of our research team and of the Standards Board, and will also effectively communicate SASB's thinking to external stakeholders. And then similar to the Conceptual Framework project, the Rules of Procedure project aims to further strengthen the Rules of Procedure document. And so by the end of the Rules of Procedure project, everyone on this call should expect a revised Rules of Procedure document that focuses on detailing our project-based model and due process and helps communicate how external stakeholders can engage with SASB. And for both the Conceptual Framework and the Rules of Procedure projects, we've come a long way since I first presented both projects for approval in September of last year, and since our last public discussion of the project. And so for the Conceptual Framework project, I've led an offsite with the project team to discuss and confirm the scope of the project, and I made revisions after the offsite based upon those discussions. I also led a workshop with external stakeholders to discuss our proposed revised definition of financial materiality and the topic of time horizon specifically. And then we've also had a number of internal discussions on the characteristics of our topics and metrics and technical protocols. And we've gone through a number of iterations of the Conceptual Framework document. And lastly, all members of the project team, as well as all Standards Board members and select Foundation Board members, have had a chance to edit the revised Conceptual Framework document. And the Rules of Procedure project is equally far along. The project team and the full Standards Board have had the opportunity to edit the document. And for Standards Board members, the latest revised Rules of Procedure draft is in your board book. And since the Standards Board and I have had less back and forth at this point on the revised Conceptual Framework as we've had on the Rules of Procedure, I thought it might be helpful to walk through some key changes between the current published Conceptual Framework and the revised Conceptual Framework, both for the benefit of the Standards Board and external stakeholders. So one thing that I do want to highlight up front is that SASB is not changing its approach to sustainability accounting or standard setting. We are not changing who we are or what we do. What we are changing is how we articulate what we've been doing. So we want to make sure that we're effectively communicating our thinking and approach to the public. And I really want to emphasize that because I imagine as a member of the public, it can be kind of daunting to see a slide full of changes to a document that governs SASB as an organization. So I just want to emphasize that one more time. We are not changing who we are, what we stand for, or what we've been doing. We are just more clearly articulating things that the public should already know about us. So first and foremost, the SASB Foundation mission statement included in the conceptual framework has been updated as there's an outdated mission statement in the current document. And then beyond that, the current conceptual framework is very US-centric. So the revised conceptual framework aims to articulate and emphasize SASB's global applicability. And then in our current conceptual framework document, we spend a lot of time justifying the importance of sustainability accounting and why it deserves a seat at the table. We at SASB feel that the sustainability accounting space has come a long way since the conceptual framework document was written, and that we no longer need to emphasize the importance of sustainability accounting. We think we now need to focus on articulating how SASB fits into the sustainability accounting landscape. So we've removed a lot of the language around the importance of sustainability accounting and replaced some of that language with details around the sustainability accounting landscape and the role that SASB plays within that landscape. And then moving on to the fourth bullet here, SASB standards are centered around financial materiality. That's our bread and butter, so we really want to make sure that we clearly articulate what we mean by the term financially material, which is why we are proposing a revised definition of financially material. Our proposed revised definition of financial materiality is in the appendix of this presentation, so I will not spend time discussing it now, but I do just want to flag that for the public as something that we're thinking about. And I also want to emphasize that we're not changing the scope of what we consider financially material. We're simply revising our definition of financial materiality to more appropriately display SASB's thinking and process. And then lastly, we've tried to make the document more concise and intentional. So we've simplified the discussion on the tenets currently detailed in the conceptual framework, and we've also refined our characteristics for topic selection and metric selection, which help define how we choose the topics and metrics in our standards.
Verity, do you have a comment you want to give in?
Yeah, just wanted to underpin this. It's great to see this language in the conceptual framework better reflecting the reality that SASB has experienced over the past years, seeing global investors outside the US use the standards, seeing companies outside the US report in alignment with the standards, and then also, that materiality definition really being more reflective of global investors everywhere, not only those subject to the SEC, but global investors thinking about the materiality of sustainability issues. So thanks, Shivani.
Yeah, thanks, Verity. Just a little wonky history. The first conceptual framework that SASB had actually came out in 2013. So if you think about 7 years ago, the way that we were, that sustainability was being discussed in the world more generally, times have changed and beliefs have moved and language has evolved as well. And so, just as part of the evergreen process of making sure that we're effectively communicating, this is a wonderful opportunity to make sure that the words we use are being understood by the public in the way that we expect them and intend them to be. So, yeah, thanks, Shimani.
Thanks, Jeff. So overall, a good number of changes have been made. There we go. And during today's discussion, we'll be focusing on these last two topics that are in red font here. So the simplification of the tenets and the cleaning up of our characteristics for topic selection and metric selection. So as I alluded to, this is not going to be an hour of me presenting. Instead, I'm hoping that this can be a discussion among Standards Board members. So I'll be projecting some questions up here on the screen, and I'm hoping that we can all discuss these questions, and then I will continue to revise the rules of procedure and conceptual framework according to our conversation today. As an FYI for public listeners, the Standards Board received memos for both the conceptual framework and rules of procedure in their board book. So many of the questions on the slide say CF or ROP, memo with the number Q, the letter Q for question, and then a number. That corresponds to the question number in their board book. So I just wanted to get that out there so that the public isn't confused and so that standards board members can follow along in their memos if they'd like to. Any questions about this session before we dive into a few questions here? Awesome. So I'm going to start by posing some questions about the 6 principles that are currently in the rules of procedure and the tenets and objectives that are in the conceptual framework. The piece on industry specificity was a placeholder in case an earlier conversation I had with the board went over. So we'll skip that part of the conversation for now and come back to that if need be. And from there, we'll talk about transparency and the importance of transparency throughout our due process. And then we'll end this portion of the presentation by discussing the revised characteristics of topic and metric selection. All right, so let's start by talking about the 6 principles on the left-hand side of this slide and the tenets and objectives that are on the right-hand side of the slide. So I think this conversation is a fun one to start on because the questions highlight the complementary nature of the conceptual framework and the rules of procedure. So right now, the 6 guiding principles that are laid out on the left-hand side of the slide are in the rules of procedure. The tenets and objectives that are on the right-hand side of the slide are in the conceptual framework. And it looks like there's overlap between the principles and the tenets and objectives. So for example, the stakeholder consultation on the left might be similar to market informed. The quality on the left is currently defined in the rules of procedure as meeting all 3 of the objectives, which are on the right-hand side of the slide. So those are just a couple examples that I think showcase the overlap between the 6 principles and the tenets and objectives. And so given that we as an organization want to highlight the complementary nature of the conceptual framework and the rules of procedure, I'm wondering if we agree with the idea of eliminating the 6 principles within the rules of procedure and instead referring to the tenets and objectives that are currently detailed in the conceptual framework document. And a couple other questions to throw out here to get the conversation started. So do you find it confusing to have 6 principles in one document and then tenets and objectives in another document when they do overlap? Do you find value in streamlining our language between the conceptual framework and rules of procedure? So maybe I'll stop there and then we can move on to the second question later.
Thanks,
but for now, Jeff, I'll turn it over to you to help facilitate. Thank you.
Yeah, thanks. So this really does get down to really the connectivity between the 2 documents. You know, if the conceptual framework is the dictionary, it's where we explain how we think, how we do, what we mean by that. And then the rules of procedure is more of the roadmap. Then to me, that they seems like they ought to be connected. And when I look at the 6 principles in the rules of procedure, they are defined as being how we, you know, the things that we hold ourselves to as a standard setting organization as we go about our operations. To me, that does seem pretty similar to in the conceptual framework when we talk about the fundamental approach that we have to standard setting and what it is with the objectives that we are trying to do. So I don't see a lot of value in having just a different list. That said, it is possible that as we dive into the more specifics of due process, that it might be that there are things we want to elaborate on there that don't need to be defined or aren't addressed in the conceptual framework. So I think that's reasonable. But at least at a high level, to me, it seems like the guiding tenets were meant to be explanatory of how we do our standard setting, what are the key aspects of our standard setting. And so then as you get into the rules of procedure, anything additional should really come directly from those. We could expand on them for sure, talk about additional aspects of any of them if we wanted to, but I don't see why we would just start with almost you know, a disconnected list. And I think this is really just a historical artifact of having created the documents at different points in time, and then you know, the conceptual framework starting first, and then the rules of procedure being something that we then added later, and we revised the conceptual framework. But you know, it's just a bit of an artifact of history, I think, in some ways, rather than intention. Dan?
Yeah, I just wanted to start by, well, I guess complimenting Shivani on the revised rules of procedure, which I think is a much more readable document than we had originally. And in the current version, I think it tend to get lost a little between principles and tenets and objectives and all that, or whatever is in there. Because I think the draft now would give a reader a clearer picture of how we operate, and in particular, what the opportunities to participate in and observe the process are. And maybe that's the most important objective of the rules of procedure. And you know, it certainly, the revised version contains the statement that transparency is core to what we do, or key to what we do. You couldn't read the document without, I think, understanding the importance to us of transparency, or to take another one, stakeholder consultation. I think there's a separate section now on how stakeholders can participate in our process. So yeah, I think the approach of streamlining the rules of procedure, making it more readable, and having the two documents be read together rather than having to sort of repeat the same ideas in different words is a good one.
Thanks, Dan.
Yeah, this is Kurt. I'll just comment if I can on this. I guess I agree with Dan. The two I think that stand out of these 6 principles that are substantial are the transparency and the stakeholder consultation. The other 4, I feel kind of like I'm doing the Boy Scout credo, you know, trusty, reliable, or whatever the heck it is. And they may be attributes or aspirations. I just don't see them being particularly, you know, insightful. They're just kind of an aspirational issue. So I think as long as we have embodied or dealt with the issue of transparency and stakeholder consultation sufficiently within the conceptual framework, then I don't think those additional 4 elements are essential. They're just, you know, things you strive for, quality issues kind of a thing. So they seem a little superfluous to me.
Thanks, Kurt. I believe it's trustworthy, loyal, helpful, friendly, courteous, kind, obedient, cheerful, thrifty, brave, clean, reverent, if you were looking for exactly what.
You can see I dropped out of the Cub Scouts after 2 meetings, so mea culpa. So.
Okay, thanks. Verity, I think you're up next.
Building off Kurt, I think maybe one way to think about the 6 principles, I like Kurt's idea that transparency and stakeholder consultation stand out as principles we want to keep pointing to, and maybe even saying that the accountability sort of comes into the stakeholder consultation framework, where we do have that accountability mechanism in terms of our following due process and allowing the public to comment on that. So we are accountable to the public in that regard. And I think the transparency kind of covers the credibility. But I agree with Kurt that the quality and timeliness are more aspirational and maybe not so directional, and listing them here as how they apply to our standard setting work.
Thanks, Verity. And if I could just maybe circle back a little bit on these 2 points that you and Kurt just mentioned. So if I'm thinking about this, then accountability and stakeholder consultation are critical to what we do, but I think of them as being embedded in our fundamental tenets for standard setting. You know, the fact that we want our standards to be market informed, and we talk about the importance of broad stakeholder consultation as part of that. So we definitely want that, I think, in our rules of procedure, but do we, one thing to think about is, do we want to just use different words there, or do we want to use the same words, or do we want to use the same words, market informed, and potentially expand on them with some additional language in the rules of procedure?
Yeah, for my bias is to embed those in market informed, which leads to both better insights and accountability to the market. Kind of so I see that as an extension.
Yeah, thanks. I think that makes a lot of sense. Embed them in and then have it show up in a sense in both documents, so it's connected.
Yeah.
Yeah, just seconding that.
Thanks, Verity.
Yeah,
Lloyd?
Me too. I guess I'm thirding it. The one thing on the 6 principles that I think we've kind of touched around, but some of those are effects. Some of those are things we can control, and some of those are things that come from other people's assessment of our work. And I think the focus, especially, in both documents, but especially in the rules of procedure, you want to focus on the things you can control to get the desired effects. So I put accountability, credibility, quality is something someone else says about you. Transparency, stakeholder consultation, and timeliness are under our control. To some degree subsumed in some of these other things, but I think transparency is, in practice, that's been very important to us, and that's something that I don't think we can just sort of wipe off the page. I think we need to get that maybe more explicit in the conceptual framework as well.
And timeliness is a little subjective too, Lloyd, in light of some of
Right.
our research projects over multiple years. You can make a question on that. So.
Yeah, standard setting has a different timeline than stock trading.
That's right.
Picking up on Lloyd's comment, the idea or consideration has been discussed that perhaps transparency could be a fourth guiding tenet for standard setting. We just articulate the staff view that I'm sure the board would not only recognize but concur with around just how crucial transparency is for a couple of reasons, both complying with due process, but in some sense, even more important to that is that when we are transparent through our standard setting process, that can help ensure higher quality outcomes. The stakeholders have the ability to be more informed into the underlying research, the underlying consultation, insight into staff and board decision making. And so I think it's a reasonable consideration to add a fourth tenet around transparency, but we would certainly be interested in either any additional comments or context from you, Shivani, on that based on what you've heard, or from the board members.
Yeah, so actually that leads us to the next question. So I just want to make sure we're not missing out on anyone else's thoughts on this one, and then happy to go to the next one about transparency and potentially adding that to the tenets here.
Shivani, this is Bob. My quick comment would be if I look at your boxes here, I would see all those 6 principles move over to the conceptual framework, and I look at the rules of procedures as process. So not that these are right, but 1, 2, 3, 4, 5, 6. There's initial staff research, there's stakeholder input, there's a proposed standard, there's board review and approval, there's public exposure and comment, and there's final release and codification. That's what I think the rules of procedures are. That how do we sequentially do it? And then over on the right-hand side are those other, kind of concepts that we want to think about. I'd move the 6 principles over to the conceptual framework.
Thank you.
Yeah, so Shivani, if you could just talk a little bit about maybe truly transparency, where it does show up. I know that you've got that teed up for us, so that'll be helpful for this discussion.
Yeah, so, okay, let's go through here and talk about it. All right, so transparency is obviously an integral part of SASB's approach to standard setting. We try to be as transparent as possible throughout the standard setting process. We have project pages on our website that provide updates on projects in an effort to share more timely information with the public. We have these public board meetings. So we do really care about bringing the public along for the standard setting journey with us. Is the idea, so the question to all the standards board members is the idea of transparency highlighted enough in the conceptual framework, or should the idea of transparency throughout the standard setting process be incorporated more directly into the fundamental tenets? So we do talk about transparency a lot throughout the conceptual framework, but do we want to more directly emphasize our commitment to transparency throughout the process?
So just a clarification there, Shivani. So I think, and maybe a little historical context here, because I am definitely partly to blame for if there is a lack of emphasis on transparency. I've always thought of transparency as being embedded in market informed, that aspect of our standard setting approach. But that's in part because the best standard setters, when they do stakeholder engagement, when they carry out their business, do it in a public way, in a way that is transparent. And I think I had thought of that as being embedded, but this process of working with you to go through these documents, I've kind of seen that actually in the conceptual framework and on the slide that we have up here right now, you can see that we actually don't specifically highlight that we're going to engage in discussion and deliberation in a transparent way, and that is really fundamental. It's not just that we take inputs, but we have to help the public to understand how we've responded to the inputs that were received, and you can't really do that if you don't have some type of public response, if you don't have some sort of public deliberation around these topics. And so I actually think when you look through the conceptual framework, transparency is not explicitly identified. It is in the rules of procedure. We, for example, in the revised draft of the rules of procedure, we talk about it in the intro as that we are committed to transparency. We talk about it as it relates to due process, that we're going to engage in a rigorous and transparent due process. We talk about it as a cornerstone of our work. And then when we summarize in the revised draft the stakeholder consultation opportunities, it's in part we point out that we're trying to be transparent, and so we also want some of that stakeholder consultation to also be a transparent process. And so it is more embedded in the rules of procedure, but not having it explicitly called out in the conceptual framework, I think, undersells the importance of it, and then unfortunately, creates sort of a disconnect between the conceptual framework and the rules of procedure. So I would be, I think, a strong proponent of including it as one of our fundamental tenets, and because to me, at the end of the day, it's not the same thing as just looking to, it's certainly not part of the evidence-based part of what we do. It is not really, we could engage in market consultation without being transparent about that. And so in order to hold ourselves to a high standard and also to communicate about that, I think we should talk about that in the conceptual framework, and then just make sure that that is elaborated on sufficiently in the rules of procedure.
Yeah, I completely agree, Jeff. I think we allude to transparency a lot in the conceptual framework, but don't actually mention it outright.
Yeah.
Sorry to cut you off there, Dan.
Dan, go ahead.
No, I was going to say, well, if you want a second, Jeff, I agree with what you said. So I tried to say before, I don't think you can read the rules of procedure draft without concluding that transparency is fundamental to us. So I don't think anything has to be done to that document or the draft of that document to emphasize transparency. But I do think it's helpful to state it explicitly as one of the tenets in the conceptual framework.
I agree. Thanks, Dan. In part, I think the conceptual framework is the more, I haven't seen the actual usage of this, but I suspect that more people read our conceptual framework than our rules of procedure, probably.
Yeah, I think that's, I'll just say when I first heard about SASB, whenever that was, I think I went to the website and read whatever was there then as the conceptual framework on the assumption that that was the way to understand the organization. And I suspect a lot of people will do that.
Yeah, thanks. Any other comments on this, or we do have one more topic to dive into a little bit? Brian, do you want to summarize what you've heard on this?
I think we've heard several comments. Going back to the 6 principles, we acknowledge that right now the 6 principles in the rules of procedure are a bit of a mixed bag. We have some principles that overlap with the conceptual framework, so we can narrow in on the conceptual framework for continuing to communicate those principles. We have some principles that maybe we could improve the emphasis in the conceptual framework, and that might be transparency via considering it an additional fundamental tenet. And then we have some principles in the rules of procedure that are perhaps just not necessary or not appropriate. It's what we're striving to do or to accomplish, credibility or quality as examples, but don't need to be explicitly named or called out by the way of principles embedded in the rules of procedure, and that runs the risk of overcomplicating things. That's what we've heard from the board. Please speak up if any clarifications or corrections to that.
Thanks, Brian. I think, and Shivani, tell me if this would be helpful, but I think, to the extent that the board members have specific suggestions around ways to make sure that anything captured in those 6 principles from the rules of procedure are appropriately embedded in the aspects of the conceptual framework, the three tenets and the objectives. Just as you're looking through those two drafts, if you've got comments on that, I'm sure Shivani and I would be very pleased to see those.
Yeah, that's great. Thanks, Jeff. Please do send your thoughts our way.
Verity,
I just want to make a quick comment, just to be clear, in case anybody's new to SASB listening to this conversation and thinking that we don't care about quality. I think, Brian, embedded in your comments is that we do believe those are all important, but we also believe they're sort of baked into the other ideas that we're discussing in these documents. Just wanted to put that out there.
Yeah, that's a great point. In particular, our objectives. I think of it as decision, useful, financial materiality, and cost effective. Like that's the way that's our philosophy on what high quality standards are. And so why use a vague word when we've got better language in the conceptual framework?
Yeah, thanks.
Great. Thanks for making that point, Verity. Quality.
All right, thank you guys. So I will move on to this last topic that we'll dive into here. So characteristics of topic and metric selection. So these are the characteristics that we consider to help us decide whether we should include a topic or a metric within our standards. And the characteristics showcased on this slide are our proposed or revised characteristics. So these are the characteristics that you all as Standards Board members saw in the revised conceptual framework that you provided feedback on. These are not the characteristics that are in the published conceptual framework on our website. So I'm going to go through these more specifically so that we can take a look at the before and the after. So what we have in our current conceptual framework that's published on our website versus what we have in the revised conceptual framework. All right, so on the left-hand side of this slide are our proposed revised characteristics for topic selection. And on the right-hand side of this slide are the principles, which is what we now call characteristics of topic selection that are currently found on the website's conceptual framework document. So I just want to walk everyone through this briefly. Let's start on the right-hand side, actually. So first is potential to affect corporate value, which talks about topics that can or do affect revenues and costs, assets and liabilities, cost of capital or risk profile. If you move to the left-hand side of this slide, you'll see financially relevant, which states that topics are financially relevant through at least one of the same three channels. So revenues and costs, assets and liabilities, cost of capital. So the first bullet on the right has been cleaned up and incorporated into the revised characteristics on the left. Similarly, we're proposing that of interest to investors from the right-hand side of the slide be changed to user interest, which is what you see on the left-hand side of the slide. Users being investors, creditors, and lenders. And then the relevant across an industry on the right-hand side of the slide becomes what we call prevalent at the bottom of the left-hand side of the slide. And then actionable by companies became actionable, which goes into a bit more detail as to how something can be actionable by companies. And then that bottom bullet on the right-hand side, reflective of stakeholder consensus, is captured to some extent in the user interest and prevalent bullets on the left-hand side. If something's reflective of stakeholder consensus, I would argue that it's also of interest to users and is of interest to users because it's prevalent across an industry and across geographies. So those are just a brief walkthrough of what those things are, what the changes that have been made are. And I want to pause to see if there are any clarification questions here. And then if not, then I'll pose the larger discussion questions.
Yeah, Shivani, if I could just quickly jump in. So just to be clear for everybody, especially those who are listening in, haven't had the opportunity to read the drafts, so for the public as well. But one thing that we're thinking about here is that at the top of our sort of our pyramid, we've got our objective, which is to have standards that facilitate the production of decision useful, financially material, cost-effective information in a cost-effective way. That's the objective of our standards. And what we want for the topics that we identify that go into those standards, we want the characteristics to then build off of that, but expand in a way that we've got some additional guidance that can help us think about what would make for a topic that would lead to decision useful, financially material information that is cost effective to produce. And so we're really looking to expand on that. And the first two bullets really capture our approach to financial materiality, which is financial impact and investor interest. And we probably could go even further, actually, to just make that linkage clear. I think we've taken a step that way, but we could actually go even further there. Actionable and prevalent start to speak to some of the ways that we think about what would be decision useful, and what would investors want to know about. Well, things that are prevalent across industries and geographies, and that actually can be managed. The companies actually can't have some scope to deal with it. So there's that. And then as we go into the characteristics for the metrics, again, we're looking for additional layers of clarity, but that are not distinct from, but really expand on as we narrow down into the finer detail of the standard. Help us think about things that would support the topics above the metrics, and then of course the objectives above all of that. So curious if we do have any comments from the board on this, just quickly. Kurt?
Yeah, just a quick one on actionable. I worry a little bit that filter may be a cop-out. I mean, what isn't possible to act on today may well be in the future. I can't think of any examples where we've actually filtered out issues, but I don't think we just want to limit ourselves to the realm of issues that today we have a solution for. So hopefully that's not interpreted as a, if you don't have an immediate plan and nobody else does, then it's not a relevant topic. So I'd be interested in your guys' thoughts that worked on this.
I think one of the challenges is if something isn't actionable, it does get difficult to think about how would you hold a company to account. How would you differentiate one company from another? Brian, looks like you have a comment on that.
Yeah. One comment there, Kurt, is where we do find this principle or characteristic helpful is not so much, I think, in terms of weeding out disclosure topics, so to say, but ensuring that we are framing and structuring a disclosure topic in a very intentional way to acknowledge the business strategies and the approaches that management can take in order to manage the underlying issue. I'm trying to think of a good example right now, but when we come to crafting a disclosure topic driven by these characteristics, we really want to be cognizant on ensuring that the way the disclosure topic is framed, the scope of it, the business strategies that are included within the scope of the topic, and then as a result, the metrics that are used to measure performance on the topic all connect back to this theme of how the topic should be actionable by companies. And so just the comment there that I think it helps us in conceptually framing and constructing a disclosure topic rather than so much weeding out a large volume of topics. I hope that's helpful.
Pulls you back into relevance, I guess.
Yeah, there's an example I would use here is to think about, for example, the automobile industry. That they are not a primary producer of Scope 1 emissions, and we don't ask for Scope 1 emissions, but we do ask for example, fleet fuel economy as something that is closer to the way in which they would be thinking about the impacts of a transition to a low carbon economy on the way that their business is being conducted, the products that they produce. And so that's a bit more of the way it would turn into actions would be one way to think.
But they can't control how many miles their cars are driven, but they can control the fuel economy of them.
Right. So there might be something that we can do here to help make it clear what we mean by actionable in terms of linking it to strategy. Thanks, Kurt. Verity?
I wonder also if it's worth thinking if actionable is trying to duplicate the financially relevant characteristic as well, with the explicit tied to future cash flows embedded into actionable. Raises questions about sort of risk exposure to tail events that may not be expected unless they occur, could be catastrophic. This is going to come up later in our tailings conversation. And just kind of asking the question, is this actionable characteristic defined distinctly from financially relevant, or is it repeating a little bit?
I know we've got a few more topics to get through, so perhaps we can go ahead and tee up the metrics level discussion.
Sure. Thank you guys for your thoughts on the topic level characteristics. So at the metric level, again, on the left-hand side of this slide are our proposed revised characteristics for metric selection. And on the right-hand side are the criteria, which is now what we call characteristics of metric selection. So we can walk through this in the same way if you guys found that helpful. So on the right-hand side, the first bullet is fair representation. We've kept the essence of this characteristic in the representationally faithful characteristic, which is on the left-hand side of the slide. And then useful on the right-hand side is actually a tricky one to me. It seems like a tricky one because it's kind of a catch-all. Like it's nice that a metric is useful, but why is it useful? So some of the project team thought a bit more about this. To me, aligned and understandable, which are at the bottom left-hand side of the slide, speak a bit to why a metric may be useful. The bottom line is that we're proposing to take out the useful characteristic, not because our metrics are no longer useful, but because we want to more clearly pinpoint and articulate why they are useful. And then moving to the right-hand side of the slide, again, applicable is somewhat covered under prevalent, which we discussed at the topic level characteristics. A question to you guys is it safe to assume that anything that decides topics also decides metrics, that these characteristics are additive and build upon each other? We think so, but that's another question for this group to consider. And then comparable, complete, verifiable, aligned, neutral, these are all characteristics that have stayed in our revised characteristics on the left, so those have been carried over. Distributive, which you see at the bottom of the right-hand side of the slide, is one that Jeff, Brian, David, Anton, and I have been grappling with for a while now. Distributive did not make it into the revised or proposed characteristic. We have put it back in, we've taken it out, we've gone through many iterations. So I want to pause here and again pose the same questions. Do you agree with the approach taken to simplify this discussion of characteristics? Do you have any concerns? Do you think anything that's missing, like distributive, for example? And is each definition additive to your understanding of metric selection?
Yeah, and let me also say that we, in addition to trying to simplify some of the characteristics, we've added some additional text. Right now in the existing conceptual framework, they're a list and they're not really connected to each other. One of the things that we've tried to do in the revised version is to make it clear how they fit together, and in a sense almost to prioritize certain ones. I mean, we have, of course, already an inherent hierarchy at the top of our objectives. Underneath that, the characteristics of topics, and then underneath this, the characteristics of metrics. At the top of that, we currently have that any one metric should be representationally faithful, and the metrics collectively for a topic should be complete. And then supporting that would be the extent to which each of the metrics can lead to comparable information, is designed in a neutral way, it can be verified, so it supports assurance, for example. And then to the extent that it's aligned with other metrics that are out there in practice, it can be more cost effective, and that it can be understood. Ultimately, that speaks to usefulness. So hopefully we're not eliminating important things that we should be thinking about, but trying to convey that in a way that is going to be more understandable, and also to guide the team's work as they think about what is it that should be prioritizing. I wouldn't want something like verifiable to come at the cost of representationally faithful and complete. Not that it necessarily would, but that it's meant to support rather than be the primary objective. Many things can be verified, but that doesn't necessarily mean that they're going to be helpful for performance measurement, or that they add to the completeness of a set of metrics around a topic, for example. Dan.
Yes, thank you. I think the only written comment I had on this part of the document was what happened to distributive. So I'm glad to hear that the staff was debating that issue. True, yeah, I mean, you might make some comments about it. I guess I can see it as an aspect of comparable and maybe even of representationally faithful. Although I wonder if you might, if that's the intention, I wonder if you might want to sharpen up the words a little to capture more of the concept of distributiveness. That is that the metric produces information that distinguishes between companies or the performance of companies that are reporting under the metric.
So one way to think about it too, Dan, is if if the topics that we've identified have identified topics that are going to be decision useful, that they're going to be of interest to investors and have financial impact and be actionable by companies, then presumably you'd be getting a distribution of behaviors. Otherwise, why would investors be interested in that? But when we get to the metric level, is that something that we would strive for necessarily? I mean, it's been an ongoing discussion. To me, it seems like it's a bit of the outcome of good standards should lead to in all likelihood a distribution of performance that when you observe across companies. But is it something we strive for on its own? Maybe not.
It does seem to me like it would be one of the, well, I don't want to coin a new word, but one of the fundamental purposes of the metrics, and is to permit investors or users to distinguish between companies and make decisions on that basis.
Yeah, I guess I find I have a hard time sort of thinking about how it relates to how it adds something in a helpful way to representationally faithful.
Well, yeah, no, I can accept that point. I just wonder if you might want to sharpen the explanation, the sentence explaining what representationally faithful means to a bit more reflect that idea.
Yeah, thanks. Yeah, and there's definitely mixed views on this for sure. So appreciate that. Lloyd, did you have a comment?
Yeah, a couple of questions around the internal debate or conversation around distributive. And I think you've just given a couple of good clues to kind of how it's gone, that a metric that doesn't give you any basis for a decision isn't a very useful metric. If we ask all companies, are you to please disclose whether you're incorporated or not, and they all disclose that they're incorporated, you really have a metric, but you don't have anything that's differential. You don't have any way to tell them apart. So even if it were important to know that they were incorporated, you're not really advancing on the problem. The counter argument, it sounds like, is that maybe I'll throw in some of my own stuff here, but ESG data tends to be messy. It's tough to get a nice linear curve when you're measuring something, and sometimes there's threshold effects. So there's things like a company might be investing strongly in human capital, but it's also possible to overinvest in it. So the very top quintile might not be the most financially relevant. You might be looking for a second quintile in some of these metrics. So is that a fair characterization, kind of the conversation, that on the one hand, this is something that ideally you'd like to have, but on the other hand, in practice, it's very difficult to get, especially in sort of an ESG type of a framework?
Brian, do you have a comment on that?
Yeah, the good comments, Lloyd. I think that is what we're striving at here, and that's why I think that in some way or in some fashion, introducing the lens of distributive is helpful for thinking about metric selection to help try to produce that there is a kind of sufficient distribution of data. Exactly what some of the key points I think you're getting at, Lloyd. So I think that we would all agree that distribution of performance is something that we're striving for, and I think that connects back to why useful is being taken out as one of the direct criteria, because it's in one of our core objectives. It's very clear and explicit that we're looking to generate decision useful information for investors. So I think the question at hand here is, how do we break that down into the set of characteristics that can be most helpful to inform staff and board thinking on the most effective metrics? And I would come back to Dan's point that Jeff has commented on, which is whether we reintroduce distributive as an additional characteristic or not, having some additional intentionality around either comparable or representationally faithful to ensure that that is a kind of very explicit focus of staff and of board. And one of the ways that we do think about how to generate decision useful information for investors would be helpful.
Yeah, thanks, Brian. I agree. I think the fans of the concept of distributive first look to the wording for representationally faithful and comparable, because as Brian said, like that is where distribution comes into the existing wording, but it may not be clear enough to convey to others who are reading the document to understand that. And so we could potentially improve that there. And then to the extent that you feel like even with those improvements, there's not enough that we could still do more, we should do more, then we can talk about, go ahead and make that clear to us as well.
Yeah, it may just be me. When I see distributive, I tend to start thinking of data distributions and bell curves. I think in many instances, the data we get won't map neatly to that sort of preconceived notion. So I think I'm sympathetic to the idea of not including distributive on the left, but not losing that core insight that some metrics are better than others, and the ones that are better than others are the ones that make it relatively easier to categorize good versus weaker performance in that area. So maybe it's something that we build more into the text, but it feels to me more like a technical point than a sort of what I'd call fundamental characteristic of what we're doing. It's something that's desirable, but at least in my experience with ESG data, it's something that's often tough to get.
Okay, thanks, Lloyd. I want to be mindful of time too. We're a little bit over the planned allotment for this session. I think we're still generally speaking okay. So maybe rather than just asking for any additional board views on this, I'll ask Brian and Shivani if they've got any clarification or wrap up on this that they would like to address first.
I think, Shivani, you can share your next steps in the project, but I would just very briefly note that the key points arising out of this last discussion were to do a little bit more thinking around the characteristic related to topics focused on actionable. Think if we can improve some of the language or how we're framing or characterizing that. And then secondly, this discussion on metric characteristics and specifically thinking about distributive. And it sounded like there are some board leaning towards not necessarily adding it as an additional characteristic or rather retaining it, but instead improving how we think about the importance of distributive data through the other existing characteristics. If that's a fair summary, then I'll turn it back over to Shivani to conclude this session.
Thanks, Brian. That's awesome. All right, so thank you guys for all of your thoughts, really, really helpful. So I will go back, take these into consideration and produce another iteration of both the conceptual framework and the rules of procedure. As far as next steps are concerned, so we don't need to go through this slide actually. What I really do want to highlight is that the revised rules of procedure and revised conceptual framework are almost ready to be exposed for public comment. We anticipate exposing both documents for public comment at the same time, given their complementary nature. So we would really like those listening and other members of the public to send us comment letters. The start of both public comment periods will be around August, early August of this year. So please look out for more information on SASB's website. And we really do look forward to hearing what you all think of our revisions to our two governance documents. And lastly, if anyone does have any questions on either the conceptual framework or rules of procedure project, please feel free to visit the respective project websites or reach out to me directly. My email is on the slide here. And just thank you all again, especially to the Standards Board for your engagement and input, and to the public for tuning in and in advance for your public comments. So thank you.
Great, thanks, Shivani. Wonderful discussion. Appreciate you walking us through a somewhat philosophical and technical discussion and doing a great job of that. So thank you. So we're going to move into the last portion of our meeting today, and that involves some more decision points from the board. So actually, I think what we'd like to do, if we could, we've got, we are running a little bit behind, but we've only had one 5-minute break, and we do have you for more than 3 hours today. So why don't we take one more 5-minute break? This will likely be our last break of the day in all likelihood. And then that'll give people a chance to just gear up for this next session, give the board members a chance to look over their materials and pull them together. And then we'll come back at 20 past the hour, and then we'll tackle our last 3 topics for the day. So with that, we'll go ahead and pause and come back at 20 after in 5 minutes. Thanks. Okay, I'd like to welcome everybody back. Thanks for sticking with us through that break as well. We're going to start into the last portion of our meeting for today, and we're going to be going over 3 projects, the first of which is related to plastics risks and opportunities. And this is something that has been discussed at some previous board meetings. And I would just note that Gail often seems to have been with the last spot, but I see that she's actually not the last spot on today's agenda. So congratulations, Gail, for getting us off with this last portion. I'll just go ahead and turn it over to you.
Okay, thank you very much. So just a quick look at the agenda today. I'm going to give a just really high summary of my recommendation to the board on this issue, as well as just some of the underpinnings of this project, review some of the market feedback we received through consultations, and discuss some recent developments which are supportive of our recommendation, and then dig a little bit deeper into some of the specifics of the recommendation. So there's been intensifying focus on potential externalities of plastic use, and that's contributed to shifting demand environment and escalating regulatory environment. And these issues and the potential risks and opportunities do not appear embedded in the current standards for either pulp and paper products or chemicals. Staff is recommending the board initiate a standard setting project on this issue for both industries, so both pulp and paper products as well as chemicals. We're proposing proceeding as a single project covering both industries, would estimate somewhere in the neighborhood of 12 to 18 months, and fairly limited resource with really just the lead analyst. So, oops. Sorry about that. Very sensitive. So at the December board meeting, we talked about the possibility of modifying the standards for both industries to incorporate this issue. And some of the developments that we highlighted were the global repercussions of China's decision to, for all intents and purposes, ban the importation of recovered products, mounting individual consumer concerns about plastic waste, particularly in oceans, potentially a resulting increasing government regulatory action related to single-use plastics around the world at an all level of government, and perhaps most importantly, the fact that large users of packaging, so large food and consumer product companies, are making commitments to dramatically change their packaging to ensure it's 100% reusable, recyclable, and/or compostable. Sorry, I do not know why I'm having such issues. So we've spent several months conducting consultations of investors. The specific aim was to get some understanding of whether or not this is an issue that they think is financially material, and whether it is something that they think, if included in the SASB standard, could yield decision useful information. And several key themes came out of these discussions. One was a pretty universal consensus that plastics is an important issue across a wide range of industries beyond the 2 that were included in this project, and that company and investors are actively consulting and engaging with companies on this issue. That said, there was arguably a little less familiarity in terms of the potential implications for the pulp and paper products industry relative to chemicals, and perhaps a little bit of questioning or just lack of knowledge on potential environmental impacts of some of those products. Another important theme was the necessity of taking a really neutral view in terms of raw material or substrate, as well as ensuring that any resulting metrics take a really broad full life cycle view. There was a lot of concern, as we'll talk about potential unintended consequences. Several investors we spoke with flagged the idea that this is a rapidly evolving area, and that might present some challenges in terms of defining quantitative metrics. That said, there was fairly broad dissatisfaction with current disclosures in this area and a view that even qualitative information could be useful. Our conversations touched on many potential areas of financial impact, revenue, costs, R&D, CapEx, potentially intangible values. And while we are starting to see the signs of that impacting financials, there was a view that it could be a couple of years before this fully manifests across both industries. As I said, it is a rapidly evolving area, and there have been several developments since we last talked about this at a board meeting in December. One, in January, China announced plans to implement a single-use plastic ban following similar moves from the European Union, India, Canada, and numerous other governments at various levels. Perhaps most importantly, the Finnish paper company UPM Kymmene announced a $550 million euro investment in a wood-based chemical facility, in part citing increasing customer needs for renewable alternatives, as well as noting their products would have an improved carbon footprint. That said, with the onset of the pandemic, there have been a couple of changes in terms of the regulatory front. Several governments have at least temporarily delayed or rolled back some of their plastic restrictions for fear of contamination. Similarly, some large restaurants, including Starbucks, are at least temporarily not refilling reusable cups for similar concerns. And then finally, within a very short couple-week period, 3 large global investment banks published collaborative research across their departments on this topic, suggesting ongoing investor and market interest. So staff is recommending proceeding to standard setting for both chemicals and pulp and paper products industry. We do believe there is sufficient indication of investor interest and financial materiality to support that. We are recommending a single project under the general issue category product design and lifecycle management. However, given different manifestations in each industry, we do think it's possible final topics and metrics could vary across the 2 industries. And our rationale for suggesting a single project is just that a lot of the underlying research, many of the consultations are likely to cover both industries, and proceeding as a single project would eliminate duplicate administrative tasks and hopefully reduce the risk of confusion. As I noted before, timing on preliminary estimate would be somewhere about 12 to 18 months, including a 6-month research consultation period leading to publication of a exposure draft. So just to take a look at our prioritization and criteria for standard setting, this would seek to address an emerging issue where there does appear to be a gap between the standards for both industries. A further indication of investor interest, there are several working groups looking at this issue, investor-led working groups looking at this issue. In terms of standard setting criteria, it is a clearly defined scope to industries and the issue of single-use plastics and bio alternatives. It addresses an issue that is quite pervasive for many of the companies in these industries, although certainly not uniformly every company. Staff believes it is feasible to address through standard setting, with the caveat that it's still unclear about satisfactory quantitative metrics relative to qualitative metrics. And staff believes there is sufficient capacity and limited resources needed to complete this project. So digging into the chemical industry recommendation a little bit deeper, the recommendation would be to add a topic and supporting metrics that would give perspective on a company's broad strategy to manage these risks and identify opportunities relating to the evolving landscape for single-use plastics. And that would include things such as renewable feedstocks, as we talked about in December, but also other activities such as changes in product development for easier recyclability, investments in new recycling technology, and potentially infrastructure. Market feedback, again, was highly consistent for this industry. It is clearly viewed as a financially material issue, and most of the investors we spoke with thought it was worth pursuing for inclusion in the standards. A few of the factors cited, someone noted a consultant that estimated the shifting use of plastics could be a 1% drag on top line industry volumes. They identified other areas of potential impact, R&D, CapEx, intangible assets potentially. Companies are starting to talk about some of their new activities in these areas, such as renewable feedstocks. And this issue does appear to be pervasive. Packaging demand shifts are being driven by global companies that are making broad commitments, and there are governments in every region of the world implementing regulation. That said, not every chemical company is going to have the same or any exposure. Not everyone produces single-use plastics or is going to have the same exposure to that. So that's something to recognize. This is just a snapshot of the existing topics in the chemicals standard. Obviously, there are quite a few. There are 12. There is already a topic for product design and use phase efficiency, which focuses on revenue from products designed for use phase resource efficiency. Clearly, it's related, but does not quite seem to capture the existing, the elements related to the issue of single-use plastics. Moving to the paper industry, the recommendation would be to add a topic in supporting metrics that would encapsulate strategy associated with a broad range of bioalternatives. So think about replacements for fossil fuel-based products. And that would include, but not be limited to, wood-based resins for plastics, which is something that we talked about back in December. It would include more traditional paper products, as well as replacements for other carbon-intensive products that, such as fuel and potentially even some building products. So as I said, the feedback I got from investors was a little less conclusive relative to chemicals. Some just hadn't thought about it, but when it was brought to their attention, did think it was quite interesting. Certainly, there were many that had been following it and were quite interested in the topic. There were arguably some regional differences, given that some of the European companies have been louder talking about some of these activities, and some did certainly express some concerns on just the environmental impact of some of these potential bioalternative products. As I noted before, just in terms of potential demonstration of materiality, since we last talked about it, a company is committing 550 million euros in this area, and they are claiming there's a strong customer demand, and they do see some improvements to carbon footprints from some of their product opportunities. In addition, the sell side is starting to pay more and more attention to this issue and noting that investor interest in these issues has been picking up of late. And this is just a snapshot of the topics we have currently in the pulp and paper product standard. There's really nothing related to this at all. And as a reminder, it was a topic flagged as a potential watch list item back around the provisional brief several years ago. And clearly, it does appear that there have been some changes since then. So we've touched on most of these, but just to run through, there are some challenges and other considerations as we consider moving to standard setting on this project. Just to emphasize the importance of substrate or raw material neutrality and being able to provide information that will convey a full life cycle assessment and cyclicality, with many investors noting that you don't want, they wouldn't view all plastics as bad. And they would be concerned about encouraging and incentivizing certain trade-offs. For instance, food might deteriorate quicker in another form of packaging, or it might be heavier to transport. So they want to make sure that all those considerations would be captured in the information that would be coming out of the standards. Timing of financial impact. So again, I think there are some early signs that this is starting to play out, but many investors did note that it will probably be a few years before you see the full impact. And then just the fact that so much is happening and changing constantly, and just what that might mean for potential metric selection. So with that, just a few potential discussion topics. Obviously, overall, do you agree with the recommendation? But maybe just digging a little bit deeper, do you have any specific concerns related to investor interest in financial materiality, particularly in terms of the pulp and paper products industry? Do you agree generally with the proposed scope in terms of product design and life cycle management general issue category for both industries? Do you agree with the recommendation to proceed as a single project for both industries, given that the way it manifests could be different? And then just to get a sense of your thinking on the potential challenges around standard setting, given the rapidly evolving environment, as well as just the timing element that it's a little bit forward looking.
Great, thanks, Gail. Thanks for that tee up. And while my other fellow board members are getting ready with their questions, I would just note that I appreciate you commenting on doing this as a single project and the logic behind that rather than two. I would note it seems a bit unusual in that we do often tackle multiple industries at the same time, but this is actually one that unusually spans different sectors as well. So in some ways, pretty unrelated, but because of the topic, it does seem like it would make sense. I would maybe note if there's concern about that, we can always address that later on by just having a board vote to break it into separate projects as well. So, if we want to start that way, if that's what makes sense to the team, it's not necessarily the way we would have to wrap the projects either. So with that, Bob, do you have a comment?
Yeah, thanks, Jeff. So Gail, thank you. On the regulatory comment, I guess I'd repeat what I said, which is I think we should continue to follow our process and be aware of the regulatory environment. Now, I know there are a couple situations where, like in tailings, we know that there may be an industry project already going on and we want to dovetail with that. So let me stop on that one. And I guess I would agree with Jeff in using your judgment too, if we feel that the single project versus two projects is doable, workable, feeds off each other, et cetera, of course we should do that. The question that I have, Gail, for you is, when I look at this as related to the makers of plastics, and then there are users of plastic. So we think about these organizations, we're going to come up with metrics as to, how they develop alternative materials for packaging. But then we have a number of industries that use that packaging. Do you think those two are related to the point that we should think about the users of plastic as we look at standards for makers of plastics, or we should separate those? And so this is a question that I don't know the answer to, but I was thinking about, there are makers and there are users.
So yeah, I can certainly address that. So the reason why I'm focusing on these two industries versus a broader cross-cutting industry is that for many of the other industries, there are elements in the standards that encapsulate this area, which isn't to say there might not be room for improvement down the road, but at least there are generally topics in there that address it and ask companies to talk about how much of their packaging is reusable, recyclable, compostable. So containers and packaging, food and beverage, some of the consumer goods products. So it just seemed more of an imperative for these two industries where there's really nothing in the standards that addresses it.
That's fine.
That said, I certainly am taking in input, which I'm sharing with colleagues that that could be relevant for improvements to those standards down the road.
Thanks.
Yeah, Kurt?
Yeah, Gail, I know there seems to be a lot of fast innovation and research being done to make these plastics degradable or have a much shorter life cycle. It seems like a very busy area right now. Any sense of whether we're early on this at all? Clearly the issue's a hot one, but the resolution of it, is it starting to become clear on how this thing may sort out at all?
Clear is probably overstating it. I mean, there's definitely activities happening. They're working on new technologies for recycling that would, that could, in theory, if economic, drastically improve the recyclability of plastics. To some extent, some of the customer pledges seem to be a little bit ahead of the suppliers. So customers are pledging certain amounts of, or in some cases are regulated certain amounts of recycled raw materials that don't necessarily exist yet. So, I mean, there's definitely a lot happening. I think it would be premature to say that it's clear exactly where things are going. As I said, even just, I'm not making a bet that this turns into a permanent thing, but even just in response to the pandemic, you've seen a little bit of shifting in that in some of those environments.
Do you feel like investors are deep into this also, or is this a new arena for them? It sounds like the companies are, as you said, the users are kind of ahead of the producers. Are investors thinking far ahead on this?
I mean, it comes up on earnings calls. Companies are starting to address it. Investors are definitely interested in it and a bit frustrated that they don't have easy ways to evaluate it, I think at this point is what I'd say. But it is a high topic of engagement for sure.
Great, thank you.
Elizabeth?
Yeah, Gail, first of all, I think this this whole research project is a great example of how much rigor we put into the evaluation materiality, because I think, you know, plastics is one of those places where we've seen a lot of very quick reaction over the past couple of years. It's in all of our lives. It's, you know, we all are very familiar with this topic at a very tactical level, but when you start thinking about materiality, it's really quite complex. So I appreciate the amount of rigor you've put into sort of taking apart the pieces and figuring out what is real, what can we prove, what do we need to work on. I know you're going to talk about next steps as part of the discussion, but I generally agree with your recommendations, but I was just wondering, like, in the very short term, what do you think what are your priorities for helping answer some of these questions, or what do you think the board will be seeing next in terms of the output of this work?
So the initial work has really been focused on just some background research and then understanding the investor side. I've quite purposely had really extracted really limited engagement so far from industry. So one is getting that perspective and understanding how they're thinking about some of these issues. And then doing some broader work on what tools and existing frameworks may exist to address some of the challenges in terms of, I mean, because the goal ideally would certainly be finding and identifying quantitative metrics to just understand kind of more of the landscape of what's out there that might be usable. So I would say a fair degree of like industry and more technical based consultation over the next few months ahead of preparing an exposure draft.
And then and that would come to us, what, in Q3, everybody, or is that Q4? I can't remember the original project timeline.
Probably would be thinking within 6 months.
Okay, great.
Keeping in mind that you might see something before that, but the next time it would come to the board for sort of a discussion or a decision point would be probably in 6 months.
Yeah. I mean, directionally, it seems like you know, you're doing the right things. It's hard to weigh in for all of the reasons that you've identified, but it sounds like you've sort of figured out a good pathway forward to try to get some more answers to fill in those gaps. So thank you.
Elizabeth, can we ask you if there's anything explicit you want to make sure Gail focuses on or circles back on in one of the next interactions with the board? Do you have any specific concerns or areas of interest that you want to touch on, or is it really a broader question?
It was really a broader question, because there's just there's a lot of complexity here that Gail, I think, did a really good job highlighting. So I was mostly curious. I don't know if there's any way the board can help. It's certainly, you know, not my topic of expertise, but you know, I was mostly just curious how, you know, she's raised a lot of good questions. How are we going to seek to answer them? Is just generally where I was going.
Yeah, and I should also mention I've been in touch with some of the broader existing working groups that are looking into this issue. So trying to get a little bit more learning from the work they've done as well.
Verity, you got a question for us?
Thanks, Gil. Great presentation, and just want to clarify the scope for the project. So on financial materiality, do you really see it as a key question to confirm the financial materiality for the pulp and paper industry compared to the chemicals industry, where it seems you have already strong basis of evidence there?
Yeah, I mean, I'm happy to discuss it. As I said, the feedback from investors was a little less clear. I mean, there wasn't strong objectives. I would certainly point to the scope of this industry, a 550 million euro investment being pretty substantial, but that's certainly the first mover. So I suspect, based on current activity, there are benefits that probably have not been surfaced just because companies aren't disclosing on something like this, but I wouldn't expect them to be maybe of that magnitude. But that doesn't mean over the next few years you wouldn't start to see more bigger activity actions that would be potentially more material versus what's going on today. Does that help?
Yes, thanks.
Any other comments from the board? This is something I'll just note while people have an opportunity to make sure that they've teed up any last ones. This is something that we're going to need a formal vote on and whether to proceed with standard setting on it. So we'll get ready to take a vote on that, but want to make sure that all the board members have had a chance to comment if they would like to. And also, just to kick it back to Brian and Gail, if there's anything that they want to summarize or make sure that they've had an opportunity to get input on if there's still questions.
So from my end, we touched on some of this, but next step, if the board does approve, would be to finalize the project plan and then begin consultations, particularly focusing on industry and technical experts, in line with producing a published exposure draft within the next 6 months.
Yeah, that's great. Nothing else on my end. Appreciate the board comments and questions on it, and I'm sensing some general level of support, but don't want to read into that too much, and would look forward to a formal vote to potentially add this to the standard setting agenda.
Okay, so this was the plan. So we're about at the end of the time for this one. So we'll go ahead and actually, we will take a vote on this now. And in order to do that, we'll not require that we see your face when you vote, but I'll ask for first votes in favor, and I'll pause long enough that we can get all of those in, and then we'll look for contrary votes or abstentions. So with that, I'll go ahead and ask the board whether they would support adding the project as proposed by Gail to our standard setting agenda. All those in favor, say aye.
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 I believe I heard everyone, but any opposed? Hearing none. Any abstentions? Also hearing none, we'll go ahead and count that as approval to add that to our standard setting agenda. So Gail, thank you for the presentation on that and all the hard work that you've been doing on this. And we look forward to hearing more in upcoming months.
Thank you.
Jeff, can I just take this opportunity to remind everybody that after the meeting concludes, we produced a document called the Summary of Meeting Outcomes. And so in that document, which is a publicly available document, we will explicitly note that the Standards Board has approved adding this project to the standard setting agenda. And then in the near future, we will also add this project or reflect the updates in the on the project page on the SASB website. So thank you very much, Jeff, and the full board.
Thanks, Brian. And I'll note that since this was a unanimous vote, everybody's on the record for it. Go ahead and make sure everyone's on mute as well if you're not speaking. So with that, we're going to move to the next topic, which is tailings management and extractives. And so Ekaterina Harden is going to walk us through that. I see she's here. So Ekaterina, the floor is yours.
Thank you, Jeff. Hello, everybody. Thank you for staying so long with us. Let's talk about tailings management and extractives. The purpose of today's session is actual board's decision on a project, on how we're going to proceed with the project. Before I present my recommendation to you, before we discuss it, I will present the latest findings from the consultation research. And then after discussion, I'll also guide you through some next steps. So the project overview, this is important. I want to remind everybody. So the project is called Tailings Management and Extractives. And our first objective is to reframe topics or topic associated with tailings to fully cover newly emerged points of investor interest to this topic. I'm not going to talk what reframing of a topic means. Shivani just talked to you about it for an hour, but I am going to talk about what does it mean when I say newly emerged points of investor interest. I specifically refer to the asset owner-led initiative by Church of England Pension Fund and Swedish AP Fund, who have engaged with the industry last year after the latest catastrophic failure of a tailings storage facility in Bernardino. And they've made their number one expectation, investor expectation for companies is zero human life loss, among 7 or 8 other expectations. And one of them is a better transparency, but number one is zero human life loss. And this tells me that this newly reframed topic that talks about tailings must talk about social implications of this topic. So however we decide to reframe the topic must cover both social and environmental impacts of mismanagement of this topic. And it must also cover the governance piece, the management piece, because it's so complex and so highly important. So today we're going to talk about topics framing. And then once we decide which path we take forward, I will start working on metrics to measure all of these angles of this newly reframed topic. But it's not going to be today. The project timeline. So anything that's inside of my control is still on schedule. There are some things I cannot control. One of them is a global tailings standard development. It's an important document that a global tailings review working group is working on in response to this increased investor interest. They're developing a document that will outline new best available practices and expectations for companies, how to manage these facilities to prevent future failures. And it could be a great source for some of the metrics formulation. Due to pandemic, it has been delayed for a few months right now. And the latest I've heard, it would be available in September of this year, the final draft. I have seen the initial draft, however, and I can use that as a starting point for my metrics formulation, among other input that I've received. But right now, these are my contingencies for the project. We have concluded consultation period. Let me tell you just a couple of points on it. You all received consultation summary that goes into great detail. One point I want to make that has been a really great success and really a great response. I'm so thankful to everybody who participated and shared their knowledge with me. Every single major mining company, not only reporting and sustainability professionals, but actually people who are managing tailings storage facilities, who are really knowledgeable and experts on the issue. And then we've spoken to really wide range of capital providers, not only asset owners and asset managers, but lenders, and spoken to voices from all over the globe, which is important because standard globalization is also one of our objectives for this project. 3 key points I would like to remind you from the consultation. So every single person said that tailing storage facilities mismanagement has both environmental and social implications. Companies recognize it as a critical risk for them many times, and therefore it requires a high level of executives' accountability. The other point that was made, that in general, companies look differently at tailings storage facilities management separate from waste management in general. The waste management topic is still material, but it's strictly an environmental issue, and it's managed in a different way from tailings storage facilities risks. And what is really great for us, what I mentioned, the consultation was really successful because there are a lot of other intelligent and smart people working on other kinds of standards right now to really improve the way industry is managing this issue. So there's really great resources for us available to work with, to align with, to develop the best possible product for companies to use to report and for investors to use in their analysis as well. What the consultation pretty much in my analysis revealed to me. So the way, what I mentioned, companies and investors look at waste at two different angles. First, there is this hazardous and toxic, chemically reactive waste that's left over when a metal or a mineral is being leached out from the ore. So that will have environmental impacts if it's improperly disposed of. If it's leaked into drinking or surface water, if it contaminates soil, it will have environmental implications. And then there are tailings, which is a mineral residue, like all that rock that's left over once the mineral has been leached out. And that is produced in a really large amount and stored in facilities. And those facilities can either fail and lead to a dam collapse and catastrophic environmental damage, to human life loss, to damage of local economies, roads, infrastructure. It also represents a loss of an asset to a company. If a facility fails, it's not only a liability for them, but they also have to rebuild this facility now. And then these impacts are so catastrophic and require a different approach to managing. And one very important element of managing these impacts and risks is, investors want to know how companies are prepared for these failures. What are they doing to failures, to prevent the failures, and what are they doing to respond to the failures if they do occur? Do they train their communities? Do they train their employees? How quickly they're going to be able to respond? So how big this disaster is going to get? So those are the two tracks of waste impacts. And the way we cover right now that in our standards is somewhat inadequate based on my analysis. We talk about all kinds of waste in one topic. They call it waste and hazardous materials management topic. It's mapped to environment sustainability dimension and waste management general issue category. So when you read topic description, it somewhat mentions all these risks and impacts, but it doesn't really measure any of the catastrophic impacts or risks, and it doesn't provide an opportunities for companies to tell the investors how are they managing the facilities. The whole management piece is missing. The social impacts piece is missing. So the metrics are not really measuring what the topic is describing. And there are different ways I think we can solve for it. And I'm going to present you a few options. So this is a table, hopefully it's helpful. On the left, I'm listing all the risks again: improper disposal, environmental contamination, tailing storage facilities, facilities management, facilities failure, and approach to failure. So like 6 big buckets. Right now, the industry standard for metals and mining coal operations covers just the top 3. We ask companies how much waste they produce and how they store it, and this is where it ends. We are not asking how they manage in facilities, and we are not asking them to describe the approach to failure. What I recommend, and what I think is the best solution here, is to narrow the topic waste and hazardous materials management, keep it under environmental sustainability dimension, and have it only discuss this industrial waste, the hazardous and chemically reactive waste that can have environmental impacts. But anything that has to do with tailings, storage of tailings, with management of storage tailings facilities, and with the management of a failure, with the response to a failure, would go into a new topic called tailings management. We would map it to critical risk management general issue category because it is a critical risk. It will be mapped to leadership and governance sustainability dimension because it has both environmental and social implications. It cannot live just under waste management and just environmental sustainability dimension because of its impacts and implications according to our framework. This way, it has 2 separate tracks. This is how the industry looks at waste. This answers all of the new emerged industry questions in 2 different places. So I feel really strongly about this recommendation. I think this is the way we should go. The alternative to it is, well, one could argue that, tailings is still waste. Let's talk about tailings and facilities that store waste and management of facilities that store waste under waste management general issue category, and keep all the aspects of tailings waste management under this newly revised, slightly expanded topic, call it tailings and waste management. Keep it under environmental sustainability dimension. But anything that has to do with failure response will go into the new topic called emergency preparedness and response. Alternatively, there's a third option, just keep the existing topic, put everything into the I'm getting some feedback from Kurt. We could alternatively keep all the risks and all the impacts under tailings and waste management topic because it's an externality of waste. It could be more familiar to the current users of the standard, investors and companies, but in my opinion, it's really not the best solution. It doesn't hit our framework, and it doesn't address, it doesn't provide the foundation to answer all the social implications as well on all the management implications. I have a table here with a lot of checkboxes. So the recommendation, the option number 1, will create the space for all 3 externalities, social, environmental, and governance. It's aligned with how industries are reporting. It's aligned with our framework, and it answers all the new emerged questions from investors in one single place. Option 2 and option 3 are missing a few check boxes, but main drawback for them is they really cannot cover social implications because they would still live under environmental sustainability dimension. So I'd like to, invite the board to discuss, hear your thoughts on the recommendation, answer your questions. If you need any more background, if you like to debate certain aspects of my recommendation. The only thing I will add is next steps. So regardless of which path we choose, I will continue to engage with the tailings initiatives that are in the works right now to seek alignment with them in terms of global applicability. I'll start working on developing metrics to measure the social implications and to measure the management aspects of the facilities. And I'm hoping to produce an exposure draft to you by the next quarter meeting. And I'm pretty confident, based on all the robust input that I've received and all the network I've established in the space now, that even if the global tailing standard doesn't come out by then, the people who are involved in the standard, I've spoken to them, and if there's something very missing from our recommendation, from our exposure draft, or if we got something wrong, they're going to tell me that something is not right. It wasn't an easy project to take on, and I know it's not easy for you to wrap your head around this complex issue. Speaking of content moderation, this had a great impact on me. Hearing about social issues from all the great people who shared their experiences with me. The pandemic didn't make it any easier. I'm really proud of the work that I've done and really, excited to share my recommendation with you, and I hope I laid it out more or less clear in front of you.
Yeah, thanks, Katerina. Just if you could you go back to the slide that's got the comparison of the three options? I think that's it's a really helpful slide, and just to make it clear for everyone, you've come to a point where you've made some significant decisions about the path forward on this project, and this is an opportunity to get a touch point with the board, get some board feedback on those preliminary decisions. So we're not looking for any formal votes today, just to make that part clear, but it is going to be really helpful it's important to get the board perspectives on where we're at the moment and if this is the right path forward. So appreciate that. Looks like, Kurt, you've got a question you'd like to raise?
Yeah, sure do. I guess first, just to comment that I think the option one makes a lot of sense, and you've helped to boil this down in a way that makes that visible. It's clear, though, that you've been percolating up some thinking about the whole issue of storage and the exposure of it around tailings. Is there any learnings from that perhaps enriches the waste and hazardous materials? Is there any perhaps influence that might push back up into that around either storage issues or preparedness for disasters? Any thoughts around that?
Well, the topic of tailing storage facilities management and this whole industry initiative, it's really aimed to prevent a dam collapse and this catastrophic failure. But this could be different failure of a tailing storage facility. It can have, a structural imperfection, can slowly leak toxins that are remaining in the tailings in the groundwater and surface water, and that can have effects on the environment, and then down the line and then pass down the chain to human health as well. So the tailing storage facilities management topic would strictly focus on critical risk of a dam collapse, but any kind of expertise I've gained, understanding what other types of failure they might exist would be folded into waste and hazardous materials management based on, where we draw the line here with the recommendation.
Yeah, just be curious if these issues exist, maybe not quite as dramatically or, huge loss of life things, but as to whether there's any learnings there that would enrich that discussion. Thanks.
Verity?
Hey, Katerina, just want to thank you again for the great work you've done here and the quantity of consultations you've had and the market feedback you received, especially from companies in the industry, is really helping us and helping you really present a really great set of options here to consider. So well done, you connecting with so many people. I was hoping you could draw out a little bit more of your thinking about how these general issue categories cover both the G and the S. And I was hoping you could explain how in the option here, you talk about the critical risk management general issue category, which sounds like a G only kind of a category, but I was hoping how you could just kind of draw out how that would be encompassing of some of the social issues that surfaced from investors as important to cover.
Thank you, Verity. So that general issue category is actually outlining companies' approach to managing both environmental and social implications. So it just describes companies' policies or the way they're managing certain risks that have multiple implications. It's not purely governance in terms of, you know, board composition and things like that, but it's describing their business approach to managing these risks. And maybe Brian and Anton can add here a little bit.
Sure, I can expand on that a little bit. And one of the ways we think about this is that the environment sustainability dimension, as well as the social capital and human capital sustainability dimensions, the disclosure topics associated with those dimensions are typically very directly based on an environmental or social or human capital sustainability angle. So the clear example on this slide right here are the top two risks that you see: improper disposal, toxic releases, and environmental contamination. Very direct environmental angles that are built into the disclosure topic. When we then shift lower and lower on that list of risks, we start to get to risks that are less of direct environmental or social angles and relate more to the company's approach to managing an issue that then has these underlying environmental or social issues or angles associated with them. And so a lot of the thinking here is conceptual. That's really, really important for the pragmatic outcome of the standard, meaning how we structure the disclosure topic. But so we want to be really clear in, are we measuring a direct environmental angle via a waste disclosure topic, or are we measuring something that's more along the lines of the company's management and approach to a higher level issue, something like failure of tailing storage facilities that then has these underlying environmental and social implications? That's a little bit of thinking or insight in terms of how SASB's 5 sustainability dimensions are useful and informative for constructing disclosure topics, and then ultimately the metrics associated with the disclosure topics. Does that help?
That's helpful. And then maybe if, Katerina or Brian, if you could just help us understand, you know, when we're looking between options 1 and 2, and those 2 different general issue categories, the 2 different topics, but they both get the same critical risk management issue. So you're doing both option 1 and 2, you're showing us how you'd make a new home that's a logical home, a home for these leadership management and also some of the social aspects that you uncovered in the consultation. So you're creating a logical home, but maybe could you comment on the benefit of tailings management being that home versus emergency preparedness and response?
Yes, of course. So option 1, the recommendation is similar how we treat nuclear plants in our infrastructure and power utilities, power generating utility industry. So it covers all aspects of managing this highly hazardous asset, how you prevent failures and how you're going to respond to a failure. Option 2 is similar to how we treat our oil and gas midstream standard, pipelines integrity. And the emergency preparedness topic there only covers how you respond to a failure. It's not talking about how you're preventing the failure. So here, this is where the line is. And this is, some investors also draw a line there. How, you know, emergency preparedness can also cover things like earthquakes and fires. So when we frame it as a tailings management topic, it's more specific to the issue that we're actually trying to address here, and more direct indication to investor and to a company, what are we talking about here?
That's great. So that you get the kind of element of management or prevention almost in your option 1, calling this a tailings management topic. Thanks.
So we don't have a ton of time left on this, but I do want to make sure everyone's had a chance if they've got something that they want to weigh in on. Bob, do you have something?
Yeah, so Katerina, on the Global Trade Organization that's working on their standard and your discussion of that, Do you have any sense about how they're going to treat this relative to your options? So meaning, do you think they're going to approach this as a separate topic like you're suggesting for option 1, or they're going to fold it into emergency preparedness? Do you have any sense of that or not?
Yes, so they address all of it in one place. It's a global tailings standard. So it has to do, it covers, there's 17 different topics they cover, more so than we have. So they do cover how companies are managing the facilities, how they're going to respond to a failure if one should occur, how they're training communities to respond to a failure, what policies they have in place, how often they inspecting their facilities, how transparent they are with public and investors as well. So they are covering all of it in one place in that standard. Emergency preparedness and response is included into the standard. It's like principle number 5, and disclosure is principle number 17. So it's pretty high up on their list of importance.
So does that confirm the fact then that the way you've suggested option 1 is treating it sort of separately is more consistent with the way the Global Trade Organization is going to portray it?
Yeah, well, that entire standard is just about managing the facilities.
Okay.
And preventing, failure, like a dam collapse. It's not even talking about toxic waste. I'll have to look it up again, make sure I'm not missing anything, but I'm pretty sure it's just about structural integrity of facilities.
So I've got just one final comment here. So as I understand it, because this recommendation is scaling back a bit the waste management, it's going to sort of split it. The metrics that are currently in the standards related to waste management are going to need to be revisited. And for coal, that makes a lot of sense. The only thing there is tailings impoundments. For metals and mining, there are things beyond just tailings. And so just want to make sure that as you're doing the consultation, that you're also, just because we are scaling one thing back to make sure that it continues to meet our threshold and understanding around financial materiality, decision usefulness for that. So you did address that a couple slides back in that bullet point too, that seemed to be the understanding that waste management would continue to be material, but just to reemphasize that as you continue to engage with investors and companies on this, that for metals and mining, a scaled back topic, and the metrics that would relate to that would be decision useful and material. So with that, I think we're about out of time on this. So I haven't heard really any significant concerns on this. It seems like the board seems generally supportive of the path that we're going down and the preliminary decision to go with option 1. Brian, do you have anything you want to add or a different view on that?
No, that sounds fantastic to me. So I just confirm that and ask any board members that object or have any concerns to speak up. Otherwise, staff will note that there's a preliminary decision from the board in support of staff's option number 1 on how to handle the disclosure topics. And then we or Katerina will continue to move forward with the project and move into the metrics development phase of the project based on that preliminary board decision. With that said, if anything comes up that warrants kind of reevaluation of the scope and framing and considerations around disclosure topics, we'll ensure to bring that forward to the board. But I think that's a fantastic outcome from staff's perspective, and appreciate the board's views. And if I capture that incorrectly, or if there's anything else to add or note, then I welcome that as well. Otherwise, thank you very much.
Thanks, Brian.
Thank you all.
Thanks, Katerina. Appreciate it. Okay, we've got one more topic. We're just going to go straight into it. It's something that has come up in the past, so it's a fairly direct topic. But once we have Anton, we'll go ahead and move into the next point, which is a discussion of a preliminary decision around the metrics for asset management. So Anton, the floor is yours.
Hi everybody, can everybody hear me all right? Great. So we're nearing the end of the meeting, and I know everybody's getting tired, but I'll try to be very brief. And I think it's very straightforward discussion. So bear with me. So today, just going to give you the board a quick update on the research and consultation on this project, and I will be seeking board's decision on the staff's recommendation. So the project was approved by the Standards Board in Q4 2019 at the meeting, and it is a systemic risk in asset management standard setting project. There were three main reasons for origination of this project. One being regulatory changes since the codification of the standards. Two, the feedback received by the staff from stakeholders. And three, new developments in products in the asset management industry that might be relevant to the issue. In terms of the scope of the project that was approved last year, the intent was to reevaluate the scope of the disclosure topic broadly, as well as the existing accounting metrics under the topic. So in terms of the potential outcomes of this project, we could change the scope of the disclosure topic as well as its name, or remove certain metrics, include new metrics potentially, or revise existing metrics. So in early 2020, the staff started consultation with stakeholders to get their input on the issue. We reached out to 52 individuals across organizations, and we conducted 15 consultations since then. It's important to recognize that the asset management industry is very unique in this context of the consultation, where stakeholders here represent both reporting entities as well as the investors who use the standards. So we wanted to ensure that we hear views on both sides. So on the corporate side, we were speaking with risk officers and enterprise risk managers, so essentially individuals in the risk role who really understand this issue. And on the investor side, we spoke with analysts and portfolio managers who are mostly on the credit analysis side. Just to note here, the reason the response rate might not have been too high, as discussed with the Standards Board previously, the COVID-19 situation, considering the profile of these individuals, made it pretty challenging for the staff to secure some of these consultations. Nevertheless, I think the feedback that we received to date is sufficient to propose the removal of accounting metric that measures percentage of open-end fund assets under management by category of liquidity classification. So the staff today is seeking board's decision and would like to hear board's view on this staff's recommendation. The reasoning behind the recommendation essentially is driven by some of the regulatory developments since the codification of the standard. The metric in the standards was referencing the SEC disclosure requirements on the aggregate liquidity classification information of portfolios. Since the codification of the standard, the SEC rescinded that requirement. It's important to point out that the original intent of the rule was to promote effective liquidity risk management through the fund industry and to enhance disclosure regarding fund liquidity and redemption practices. So the rescinding of the rule has nothing to do with the intent. It's not that the intent was not needed there. Essentially, the revision is driven by the feedback received by the SEC from interested parties, and the reasoning can be summarized as that the disclosure, that specific metric that the SEC was suggesting, would potentially confuse and mislead investors rather than help them understand the liquidity characteristics of portfolios. And therefore, speaking in the SASB language, the conceptual framework language, what the SEC's decision means is that the existing accounting metric is no longer aligned and may not be representationally faithful considering the reasoning behind the ruling. Additionally, we have a few examples of companies, asset managers already using SASB standards, and in their reports, there are two examples here specifically, BlackRock and State Street. They chose to omit this accounting metric, which is consistent with recommendations in our standards application guidance for companies that they able to omit certain metrics and explain the reason. So both of these companies decided to omit the quantitative metric on liquidity, and both of them cite reasons as lack of usefulness and informativeness, as well as potential risk of confusing investors, which is essentially the reasoning that the SEC put forward for rescinding the rule. And in the consultations conducted by the staff, there was agreement that the metric as is not useful, and the consultation feedback supports the removal. So as I noted, though, the initial intent of the SEC ruling was to promote liquidity disclosures and be useful to investors to understand liquidity characteristics of portfolios. And that's something that we've been hearing from from stakeholders in consultation as well, that that approach is needed. And in fact, in their new ruling, the SEC said that they would be continuing research and consultation to develop metrics that would be more appropriate and better metrics to measure this risk. And so that's very much aligned with what we're hearing from stakeholders. And for that reason, staff next step would be to continue research and consultation and development of new metrics that would be capturing liquidity risk and net asset value risk and pricing risk for portfolios and funds. Additionally, we've heard feedback that the existing metrics, two additional metrics that we have under this topic, specifically those measuring exposure to securities lending and underwriting of derivatives, may not necessarily be most useful in the current form. So there are some recommendations from stakeholders to improve those metrics. So staff believes there is an opportunity to improve the metrics, therefore it would be beneficial to continue the consultation. So after the continuing of the consultation and research, staff would be able to present and develop an exposure draft to the board for the vote. And at that time, we would be able to release the exposure draft for public comment period. But at this point, we are not proposing release of the exposure draft. So again, today the staff is seeking board's decision, preliminary decision on removal of the accounting metric FNAC 550A.1, which is percentage of open-end fund assets under management by category of liquidity classification. Staff is not proposing release of an exposure draft for public comment at this time. And I would like to hear the board's view on this recommendation. So at this point, I will turn it over to Jeff to kick off the discussion. Thank you.
Thanks, Anton. We don't have a ton of time, but I do want to make sure that there's an opportunity to voice any concerns if there are some from the board. But just to summarize, when this project was started, it was to address the issue of systemic risk management and an issue with a metric in particular related to the liquidity. The preliminary decision from the staff is to eliminate that, but rather than just stop the project there and propose that as something we put out for exposure, we're going to continue to try to improve the performance measurement on that topic. And I think that also makes a lot of sense. And so appreciate you getting us to this point, and then looking forward to you doing some continued work on this. Want to give anybody an opportunity from the boards to chime in if they've got concerns with that that proposal at this point. Hey, Dan.
Hey, I have no concerns. I just like to say that I think the precedent of discarding a metric promptly that we discover isn't useful is a good one, and I commend the staff for doing that and exposing this decision to the public before the rest of the project, or as the rest of the project goes forward.
Yeah, thanks, Dan. To be clear, to everyone listening in, so we're not making any change at this moment. Of course, changes only go through with after public exposure and then a formal vote. But we are proposing that this will be part of. This is a preliminary decision toward a revised standard on this. Sounds like I'm not hearing any significant concerns. Not surprising, given we've seen this in the past, and it makes a lot of sense to me. And you've teed it up well, and also in the material. So, with that, Brian, anything else you want to say on this, or are we?
No, hearing no objections, and what I think is general support from you, Jeff, in terms of the preliminary board decision to remove the metric cited on this slide here. We will note that. Again, in the summary of meeting outcomes document on the project page and potentially in other locations as well, and communicate that preliminary board decision out to the public, and then continue executing the project as Anton described. And so thank you. I think it's good to communicate kind of progress on projects and key milestones out to the public as we continue to execute projects here.
Great. Thank you, Brian, and thank you, Anton. Okay, we are at the end of our time for today, so we'll go ahead and move the slides forward. We've got, just for everyone's awareness, we have 2 more board meetings tentatively scheduled for 2020, one in September, one in December. Also, I would let our listeners know that today's meeting has been recorded. It'll be available on the SASB website. Just look for our board calendar, and there'll be a link to the archive there, as well as the project page, which will get updates for the projects that had preliminary decisions today as well. So I would ask the public to also watch for exposure drafts, as were mentioned, for the rules of procedure and the conceptual framework projects that'll be coming, later this summer. And then I'd also just like to say thanks to everyone. Thanks to the board members for making time today. Thanks for the public for listening in. A lot of thanks to our staff for teeing up the topics in the discussion today. I thought everyone did a great job on that. And big shout out as well to Brian and to David for their leadership of the team, and in the backgrounds to Coy and Blanca for helping to support the meeting today. Done a lot of work on that as well. So with that, unless there's anything else from you, Brian, go ahead and close the meeting for today.
No, nothing else from me. Thank you very much, Jeff, and to the full standards board.
Great. Thank you, everybody.